Yo, what the fuck is good? How are you all doing? How are you all feeling? How are you all living, man? Welcome back to the stream. Welcome back to the stream. Welcome back to the stream. Welcome back, man. It's so good to see some beautiful faces in the chat. You already know the drill. If you're watching on YouTube or Twitter and you would like to chat, twitch.tv/threadguy. Rough times, but PSP, man. I don't know if you consider that rough. I guess we're calling that rough now. Hitting a fucking binker in public, we're calling that rough. I guess. Maybe. But no, in all seriousness, it's good to see you guys. It's good to be here. We have a lot to talk about. We have a lot to cover. We have a lot to get into. We got a big stream. We got 17 minutes until market close, and it's a wild market close, to say the least. We have software joining in. All I want to know is that your decision to sell Zeke, or did your team advise you to? There's no trading team. Everybody makes their own trades. I'm gonna talk about it. Obviously, everybody wants to know. Everyone's asking. Everyone's calling. Everyone's tweeting at me, DMing me, Telegram, iMessage here, WhatsApp here, WeChat there. Everybody wants to know, why did I do it? How did I get there? How did I get to this point? I'm obviously going to talk about it. Okay, I'm obviously going to talk about it, but we have a lot to get into today. We have a lot to cover. Your ability to be happy with the trade like this, bro. I made 175 bands. Why are you impressed with my ability to be happy? Man, 175 bands talking about I'm impressed with your ability to be happy. We must come from different places. No, but in all seriousness, we have Ryan Watkins and DeFi Monk are going to come on in an hour and 16 minutes, which is going to be awesome. We'll probably be on for 45 minutes, so we're going to cover intro. I have some stuff I want to talk about. We'll do roll call. We're going to do stocks. We'll do market close. We'll get Trump accounts, hit a couple things, mergers, acquisitions, SpaceX, all of this. Then we'll bink Ryan Watkins for crypto, DeFi, Bitcoin, everything in between. And then after, we have a bunch of stuff, a couple trades I'm a little bit excited about right now. Eli Lilly's one we're going to talk about. It's an interesting one. There is, look, man, you can't win them all. We have a lot to cover. We have a lot to get into, and we have 15 minutes until market close. So once again, if you're watching on YouTube or Twitter, you'd like to chat, twitch.tv/threadguy. And on that note, let us start with a roll call. Caleb, what's good? Caleb, what's good? Sai, what's good? Sparky, what's good? Golden, what's good? Rockefeller, what's good? Pudgy, what's good? Valor, what's good? Rectal, Glizzy, what's good? Pipe Bomb, what's good? Little Live TV, Jackson Ray, Sparky, Seth, Jaylet, Just a Wick, Proof of Work, Smart Doug, Sneak, Rockefeller, what is good? Rock, what's good? Malcolm, what's good? Wavy, Baby, what's good? Goldness, what's good? MC Soul, what's good? ML Soul, MCL, McClan Soul, the Maverick, what's good? Gerlin, what is good? Nasdaq, what is good? Art Mommy, what is good? Shifty, Yonin, One Positive Dude, Kenyon, what's good? Joker, what's good? Kaya, what's good? Art, what is good? Hey, has anyone seen this Obsession movie? Has anyone seen this Obsession movie? I'm trying, like, is it really? I don't really fuck with scary movies, but I really want to go. I don't do scary movies, but like, it looks so good. I'm kind of down to, like, on some freak shit, go watch it. Like, actually scary. I don't do scary movies, I'm not gonna lie. I really don't. But I want to go. Maybe it's not a good date idea, but I want to go. I'm sorry, I want to go. Everyone's told me it's like genuinely terrifying, and I don't like scary movies. I watched Insidious. I used to cry when I watched Insidious. I remember watching Insidious for the first time. I started crying. So I don't know. Maybe I'll watch it on the first date. I told you I'm like Zion. I'm like the Mike Coach K of first dates, brother. I'm like St. John's of first dates. It's better for dates than margin call. I told you my thesis on watching margin call on a first date. Okay, it's like you get it out. You get it out of your fucking system. All right, I have a fun story for you, real quick, before we start, and I'll tell you why I sold Zcash and we'll do market close. Yeah, tiptoe through the wind. Dude, Insidious was scary as fuck. I remember watching it for the first time. I was crying, genuinely crying, but I was young. All right, I'm reading. I have a funny story for you. Let me know percent. What's good? I'm reading More Money Than God is Richer Than God, More Money Than God, and it's the hedge fund story. I just got to the .com bubble. Okay, And the thing that's funny about the dot-com bubble is there's obviously a bunch of parallels to the market that we're in right now. People love to draw the comparisons. We did a couple segments comparing the two. A lot of differences, a lot of similarities. But the most fascinating part of the dot-com chapter in More Money Than God is that the two biggest hedge funds in the world at the time, Tiger and Quantum, which is George Soros and Stanley Druckenmiller, basically both blew up on the way up, like during the inflation part of the dot-com bubble, like not on the aftermath and the way down, but they basically blew up on the way up. Okay, which is crazy. And so in the case of Tiger, they tell this really interesting story where right before the dot-com bubble, they got super short. They got super long the Japanese yen. And they went at it really hard. I think they had like 20 billion AUM and they were long like $3-4 billion of the Japanese yen. And a couple announcements were made and the market starts going against them, right? And so everyone is short the yen, short the yen, short the yen. And they're down 500, they're down a billion, they're down 2 billion, they're down 3 billion. Once they got down 3 billion, a bunch of their LPs started requesting money to withdrawal. And they sort of were sitting on like life support in this position. Like they had so much money in it. They were so long the yen, and it's just going down and it's going down and it's going down. And if they were to sell and close all their longs, it would also get destroyed. And so all these other funds start positioning super short, trying to basically take Tiger out. Like they know it's coming. They know they have to capitulate at some point. There's all these withdrawal notices coming in. This is right like 1999, like right before giga inflation in the dot-com bubble. And so all these funds start basically fucking with them and like slamming short the yen. And so they don't know what to do. They're trapped in this position. There's no liquidity in the books. They're down multiple billions of dollars and they don't know how to get out of this position. And so it's panic dumping. They're so long. And so what do? This motherfucker, Julian Robertson is an absolute sicko. What they do is they call an emergency all hands meeting. They bring in all the best traders at Tiger and they figure out, what do? We could sell here. We could cut our losses. We're going to get slipped to fuck. It's going to be our worst trade of all time. We're going to lose billions. Everyone's going to withdraw. This whole thing is going to go into shit. And so what do? They take $150 million and they slam long. They add. And they basically tell the market, if you're going to carry us out of this trade, even though we're already down 3-4 billion, you're going to have to come for the jugular. They fucking add to this position. They're on $4 billion. They add to it. Okay? They add. Everybody else panics, close their short. Yen goes their way, pumps. They get out of this position. But the thing about them getting out of this position, okay, is we're in the early to middle innings of tech stocks and dot-com bubble going parabolic. And so all of Tiger's LPs kind of panic and are like, dude, we're down 10% in the year. Everything else is up 30%. And we just got out of a fucking jam because they sent out like a monthly report. Everybody knew they were positioned in the yen and they were stuck. They barely get out of this thing. They lose 2-3B, lose like, 10% of the fund. And then there's like this mass withdrawal announcement. And so they go from like 20 billion, lose 3-4, have another couple billion withdrawal, and they have like 15-14 AUM. And so they're kind of late to the dot-com rip. Everything's just going up only in a straight line. No fundamentals. Yes, is what I mean by LP. No fundamentals. If you add a website, you triple, you add 2x to your market cap. And so they're late to it. And also their trading strategies, they're very they're like alpha driven stock pickers. And so they go like super deep into DCFs and into all these models. And they're like into cash flows. And they're not like riding trends. They're making like alpha driven like picks. Okay. And so mentally, Julian Robertson is like, I can't play this game. Like I cannot just turn my brain off and slam tech stocks. And so what they do instead is they go super deep on a couple like airlines. Okay. They go super deep on airlines and a couple like suppliers like Caterpillar and things like this. But they go super deep on this one airline. Maybe it was American or something else. And the trade works. Like it catches the trend at the back end of this tech explosion. And it does like a 5x. And so they missed out on all these gains in tech. They got carried out in the yen, but they're playing catch up on this airline stock. He hits a 5x, okay? But the problem is they have so much fucking money to deploy that the positions are massive, okay? And so after this thing hits a 5x, they own 1/4 of the entire company. I think it was American. We're just going to say American Airlines for the sake of the conversation. They own 1/4 of the entire company, okay? And everyone's like, you got to sell, you got to sell, you got to sell, you got to sell, you got to sell. But they're looking over at all these other companies in tech, and he's like, he has to catch up on gains. He's got to catch up on gains. So he's like, no, I don't want to sell. I don't want to sell. I don't want to sell. And so he owns 1/4 of American and a couple other like airline adjacent kind of stocks, whatever. We'll say airlines for the conversation. He doesn't sell. Okay. Bubble goes higher. Airlines report some bad earnings. He's now trapped in this trade. Okay. It pulls back 30-40%. His gains are down significantly. You round trips a ton of UP&L. Everybody else is getting hilariously rich in tech stocks. And so what happens is, even though they're up a good amount of money, they're super underperforming the market because they couldn't turn the brains off. And this is back in the era where LPs could submit a withdrawal notice quarterly. Now it's like annually, maybe once every 6 months. It was quarterly. And so coming up on the quarterly withdrawals, all of their LPs are slamming withdrawal requests. Like all of them. Like they have $15 billion AUM. There's like $10 billion. That's like, we want to withdraw right now. You have to honor it. And so what happened was they were super positioned in like 3 or 4 stocks. They own like 1/4 of each respective company with the liquidity that they had to return to LPs that were requesting it out. Everybody in the market knew what they were positioned in, and they had to liquidate. They had no choice. It's like the rules, right? They don't want to go to jail. And so what happened is all these other funds saw and smelled blood in the water and just went super short. American, all these other, the 4 companies that Tiger was positioned in, and they just sat there and they waited and they waited and they waited and they waited, and he had absolutely no choice but to close his eyes and fucking dump it. You get slipped to fuck, you get terrible execution, and you draw down a significant amount because everybody front ran your sells because they knew it was coming, because you were underperforming, and there was huge withdrawal requests, and you have no choice. And so he did the only thing that he could do, which was close his eyes and fucking sell. And by the time the aftermath was done, Tiger, in the craziest bull run in the history of the world, one of the best hedge funds of all time, went from like 20 BAUM to like 5. They had a massive red year, and Julia Robertson retired on the way up, bro. On the way up, like during the craziest blow off top run the market's ever seen. He got carried out back. They took him out back, and they hit him, and that was it. Obviously Tiger's going on to do crazy things. There's all the Tiger Cups. We've learned about them on stream, but they carried him out because the LPs quarterly requests. It was wild. It was a crazy read. Same thing happened with Quantum and Druckenmiller. Basically, they giga underperformed. They giga underperformed. They got crazy FOMO. They slam bought the top. Got stuck holding a liquid garbage. LPs requesting money. They can't get out of their positions. They manage too much fucking money. Same thing happens. First red year ever. Stanley Druckenmiller says, I can't do this anymore. Retires from Quantum. Leaves George Soros. Obviously goes on to start Duquesne and like do his own thing and become, best performing fund of all time, basically. But the two dominant funds of the 90s, like the two like leaders, Tiger and Quantum, George Soros, got carried out on a fucking stretcher on the way up, brother, on the way up, not the pop, on the way up. And so there's a lesson in there somewhere. I don't entirely know what it is, but it was a wild read. It was a wild read. I love the book. It's obviously, I love it. I recommend it to anyone if they are interested to read it. That is number 1. Okay, number 2. If you're watching on YouTube, Twitter, you'd like to chat, twitch.tv/threadguy, yada, 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 yada. Before market close, I sold Zcash. All of it, every dollar, one click. I sold every dollar of my Zcash this morning. I posted a P&L, which is very rare. I don't usually do that. I posted a P&L And I know the market closes in 3 minutes. It's going to take me longer than 3 minutes to talk through this if you want me to talk through it. I think I should talk through it. You know, a couple things. Number one is I definitely got like a little bit emotional about the trade, which is you know, there's this weird split mindset here, which is that probably my biggest risk to hitting my P&L goals in the market is spending too much time on Twitter. Unfortunately or fortunately, depends how you look at it, my job requires me to do that. So there's really no way for me to cut out the noise when I trade. And so this is just going to have to be an obstacle that I navigate. I will talk through why I actually sold it. But what I do know is I was walking on the way to coffee this morning, and this guy made a tweet and was like, the market isn't back until like threadguy round trips his entire Zcash P&L. And he posted the screenshot of my trade. And I went in the comments and I said, shut up, you fucking, I basically called him a fucking retard. And then I spent the next 10 minutes watching the 1 minute chart. And then by the time I got home, I was like, I need to sell this right now. I have to sell this. The main reason I sold it, I think, is my entry was very clear, which was like, I think this unbelievable wealth generation event that's happening in stocks right now is extending out to high beta, right? We're getting riskier and riskier. We're getting further and further and further away from the original narrative. We're going from NVIDIA, that we're going all the way out on the risk curve, right? We're ripping Korean stocks, we're ripping everything. And I looked at crypto and I'm like, man, one, Hyperliquid has been a huge vehicle for price discovery on a lot of these assets that are seeing price discovery. This thing should be fucking repriced. And assuming Hyperliquid gets repriced, which was fairly obvious it was at the time, I think there's going to be a couple alts that really matter that are going to catch flows in this narrative. One of them being Zcash. It has the quantum. It has the better Bitcoin. It sort of has every reason to get flows. And it's a coin I've loved. One of my best trades ever was Zcash Part 1. And so I positioned, the market went my way. It sort of turned it into a monster. The problem with the trade is that, one, it was very much a trade. I was trading Zcash. Like I didn't, you know, should I have a bunch in cold storage? Yes, but I don't. I was trading Zcash on leverage, on Hyperliquid. And number two was a big part of my entry was sort of like vibes and price action. And so with a coin with a coin like Zcash, like it's kind of like a meme. It's much more. It's very akin to Bitcoin, right? It's very meme reflexive, like vibes, narrative, sentiment, flows driven. And so it doesn't give you a great entry. It doesn't give you a great exit. And so the P&L obviously got really high. Coin started to go really well. And it was looking like it was going to just fucking rip out. And it still might. But it kind of gets cucked by Bitcoin, right? Bitcoin being like a super chud. It gets cucked by Bitcoin. And on the way down, I really just had this I don't know. I just had this moment last night where I'm thinking about it and I'm like, why is Bitcoin down? Well, the reason Bitcoin is down is fairly obvious to me. It isn't really Sailor. It isn't really quantum risk. It is nothing more complicated than the richest people in the world are frothing at the mouth to get as much leverage as possible and throw all of it behind the super intelligence trade. Every dollar in the world is basically trying to figure out how can I allocate as directly as possible to super intelligence and AGI and the AI trade. And anything that isn't that is not in the tunnel vision. It's just getting left out. And like, yeah, Sailor doesn't help. And yeah, quantum doesn't help. And all these things don't help. But anything that isn't that is sort of out of the scope for now. And that will probably change. I think it will have its moment. I'm a turbo Bitcoin bull. But crypto just isn't that right now. It's not. And we've had this thesis, right? A couple alts are going to outperform. And I don't know. I just like sat here last night and I'm just like looking at my P&L and I'm watching it go red. And I'm just like, why am I doing this? Why am I doing this? Why am I fighting the trend? Why am I fighting this? I look around and I'm like, man, Micron just went from 80 billion to $1 trillion in like less than a year. You watch Intel go from 100B to like 600. You watch Trump tell you to buy Dell and Dell 2-3Xs. You watch Trump to tell you to buy Quantum 2-3Xs. You watch I don't know. I'm just like watching all of these things trade. And I'm like, why am I fighting this? Trying to be some sort of like, why is it the case that you are like a hero for bull posting crypto. I don't want to be. You don't want to be a contrarian, right? Being a contrarian everybody wants to be a contrarian until it's time to be a contrarian. And why would you want to be a contrarian? Why? There's no real reason to do it. Like you don't. It sort of like breaks my number one rule, which is like I'm not in a game of predictions. The trend will make itself clear. The wave will make itself clear. I will ride it. I will make money. I'll get off when it's time to get off. And that's where you want to be, right? It's like being a contrarian like sounds cool. They made a movie about Michael Burry, but it's like contrarians are only right like 10% of the time. Okay, so you could either be right 10% of the time and be miserable the other 90 and get outperformed, or you could be right 90% of the time and just try to get off really fast in that 10% outcome. And so I don't know. I just like walked. I went out, got a coffee, and I came back, and I was just like really thinking about it. And I was like, I don't know. I don't want to be in this trade anymore. I don't want to be in the trade right now. I'm thinking about it too much. It's like I'm stressed about it. I don't want to be stressed about it. It's been a great trade. I'm just gonna book the P&L. And I don't want to like hang out here and chop and like be miserable fighting Bitcoin. Like I don't want to fight Bitcoin. And I sold it. Yeah, I sold it. It was a sick trade, 6-figure trade. I'm hyped about it. I feel like we did the whole thing in public. I telegraphed my entries as directly as humanly possible. I don't think there's a lot of 6-figure crypto trades that are happening in the month of May 2026. So it was in public. I'm super down to enter it again, by the way. Super down. You rip this thing above 600. You rip this thing above 650. I'm back. I'm back in the game, brother. Because I think like something interesting that just happened today, we're going to go over market close in a minute, is SAS caught a bid for the first time in a while. Like a real bid. Like IGV up 3%. SAS caught a real bid. And Satrini made a tweet about it, and he was like, this, you know, it might be time for the everything bubble, not just the AI bubble. So maybe I was just a little bit early to the Zcash trade, but Quantum is about to get a huge bid on, you know, Trump just invested $2-3 billion. France is investing in Quantum. Like Quantum is becoming a big narrative again. All these Quantum stocks might catch some huge flows. There's a couple ones I like. I'm actually looking at right now. I wish they're on Trade XYZ. And Zcash is probably a huge beneficiary of that. And so I'm ready. I'm a trader. I'm a trader. One of the biggest things I've learned in crypto is that, you know, there's that Suzu tweet, which is like the biggest secret in trading. Best kept secret is that most of the money was made top blasting, you know, new all-time highs. Most of the money that was lost in crypto was by bag holding altcoins. That's the real truth. That's the real truth. Most of the money that was lost was by becoming a community member of altcoins, okay? Which is not something that I want to do. And I think Zcash is awesome. I think privacy is awesome, but I don't know. I'm not the founder. You know, I'm just a trader. I'm here to trade. I'm here to ride trends. I'm here to make money. And so it was my best trade in a while. Could I have played it a little bit differently? Sure. Could I have sold 25% at the last at 670? Absolutely. Could I have bought some spot? Absolutely. There's a bunch of different things I could have done. I bought slowly on the way up, slammed on the way out. It was a little bit of a rage slam. I'm going to be honest, a little bit salty about it. And I am very satisfied with the trade. So that's Zcash. I mean, I'm going to be honest. This was nasty. Okay. This was nasty. This is nasty right here. This is dirty work. This one in particular. This one in particular was dirty work. It really was. It was dirty work. Also, yeah, maybe you can see my wick on the chart. Let's see. Yeah, right here. Here I am. Here's my body right here. That's my wick. So that's the trade. It was a sick trade. It's my longest trade I've held in a while. It was my biggest trade in a minute. I'm probably gonna retire the public wallet, by the way. I'm being told that I should stop trading on a wallet that people follow. Does make things difficult. So maybe that was my last public trade from the account for now. But also Clippers, I'd prefer if you don't post Zcash right now. We can work on it, but don't just like rip Zcash posts. And yeah, that's the trade. So I posted this on the chart. Back above 640, I'm down to play ball. This thing wants to play ball. I'm down to play ball, and I think hype looks really good. So I'm down to play ball if we go back up. But that's my trade. I'm out, and on that note, it is 4:07. You already know the drill. Market Close. You already know what I want to know. What are you in? What are you out of? What did you make money? What did you lose money on? What are you looking to enter? What are you looking to exit? What do you like? What do you hate? What did you sell today? What did you buy today? Give me the whole Palantir. Looks good. I'm long on threadguy. I'm long on you, brother. Looks good. We'll get into it for sure. What else? What else? What else? Added VVV. I'm very interested in VVV. Hype long at 56. Congratulations. Corsair. Whoa. From a stream? Wow. That's a fun one. Service Now. Nice. BBB. BlackBerry. Nice. Bitcoin dominance. You're long Bitcoin dominance. I bought INFQ. Nice. Nokia. Nice. Been holding Ethereum for 6 years. Oof. Damn. DELL earnings are ungodly. We're about to look. DELL trade is disgusting. VeChain. Why? You recommended it. I entered 2 months ago. I like that. I'm really big into the local AI trade. Trying to figure out how we can get to the local AI trade as much exposure as possible. We'll look at DELL in just a minute. Hold up 12%. Yep. Trump accounts are live, which is fucking awesome. In Rocket Lab since 30. Congratulations. That's a sick trade. Full port Bitcoin and Soul Shorts. No DELL and HB3. I know it's so brutal. What's your opinion on BitTensor? I don't really have one. I don't really have one, if I'm being completely honest. I traded Tau as just a trade, but I don't have much opinion for you. Local AI. The problem with the local AI thing is I think the best exposure is probably Apple. Just like everything's at ATH. Check out his friend Matt Farley. Reddit looks great today. SAS got a bid. It's crazy. RPI. SAS got a bid today, which is crazy. Like a real bid. Not just like a couple hidden names. It got a real bid today. Are you missing BitTensor as a whole if everyone in AI talent is moving there? Everyone in AI talent is absolutely, unequivocally not moving there. He called Rocket Lab, Palantir, and many others. Matt Farley. I think I've seen him on a mid. What else you got? What else you got? We're about to look at the charts. What else you got? What else you got? What else you got? Bang them out. 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 Bitcoin short. Yeah, it's a tough one. I'll talk about what I think happens to Bitcoin from here. Lily, I like the Lily one, by the way. I really like that. I really, really, really like that. Near, interesting. SMIC is interesting. Long RDW from BTQ as it pertains to Mythos. ASTS is crushing. Nice. All right, let's take a look. Let us go under the hood. Let's take a look. Let's see where we are at. We had more war, Iran, fake ceasefire headlines, which is always fun to get. The SPX closes up 0.58%. I think it opened red this morning, first 15 minutes. And it is up 0.58%, closes at 7562.62. New all-time highs on the SPX. I want to buy more Take Two, but I hate using Webull. Webull sucks. That's how I learned how to trade options. It does suck. They don't have Take Two on Hyperliquid. They should. The Kospi closes down 0.5%. The Russell up half. QQQ up almost a full percent. The semi index up 1% and outperformed. The semi index is the IGV that closes up 2.83%. And this thing right here looks like a monster. I got to be honest. This is starting to look very interesting software. And the reason this is interesting to me is that we might be entering that. So Trini made the tweet, but this bull run has been very focused. It's been very semis, very AI trade, exclusive energy, photonics a little bit. It's been semis, AI trade only. And SAS has just been in carnage. But all of a sudden, we are up on IGV, give or take 29% off of the bottom. And that is pretty inspiring. Before we get into crypto, let us take a look at the earnings guy who has reported on DELL with a fucking monster of a beat. And if we go to DELL, just start us off with some green. Up 10% after hours. And this is a $200 billion company. Up 10% after hours. It was a Trump hard shill stock, and it is up only right now. Incredible to see it. How is this not on Trade XYZ? It needs to be on Trade XYZ. Moving on, crypto. First and foremost, Bitcoin. I'm going to be honest, guys. I think it looks terrible. I think it looks terrible. I think it's completely out of the spotlight right now. I am not gonna come here and just like bear cuck Bitcoin, but you gotta go run the Sailor entry for sure. I mean, you gotta just run Sailor entry on this 100%. You gotta run Sailor entry. You gotta rip it. You gotta just capitulate this thing below 70s. There's all these longs hiding in Sailor liquidity. You gotta just run them all, I think, and get people out of it. So I don't have much of a take on BTC. Do I think it makes new lows? Probably not, but why fight it? Every rich dollar in the world, every smart capital allocator in the world is rushing to get as much leverage as humanly possible on the AI trade. Why are we fighting it? I don't understand. Why are we fighting it? I don't know. So we're not going to do that anymore. We're not going to fight it anymore. Hyperliquid, I think, looks really good. This is the one coin which we'll talk about a lot during Ryan Watkins' interview as well, which if anything was going to go, it is hype. I think this thing looks really, really good. This yellow line is ATH tick, sort of consolidating right on. That looks great. Zcash, we talked about it. I sold. I'm out 530-ish, 526. I'm out. I'm down to re-enter above 650. Anything before that. This will get flows. This will make a new all-time high. But for now, I'm good on Zcash. I'll let it play out. I think ETH is the worst chart of crypto. It is the guy who said he's been holding for 6 years. I'm genuinely sorry on ETH. And Solana, the same, is just brutal. Really, really, really brutal on Sol. I don't know how low these things can go, but it can always go lower and it can always chop longer than you want it to chop. So looks terrible. Where are my metals chads? Gold had a really nice daily, up 1%. Actually looks interesting here, especially if we start getting a market-wide rip. I think gold looks interesting. Silver looks decent. And then copper's the one that I like the most if we were to get a rip here. I think until north of like 6.6, it's not something I'm going to trade because I have no experience trading metals, but the copper thing looks very interesting. Yeah, what do you do if you're Tom Lee, man? He's what, 10B in the hole on ETH, average of like over 3.5K maybe. What do you do if you're Tom Lee? Brutal. The thing about it too, if you're Tom Lee, is that he's made money from this. He's not getting paid whether or not ETH goes up. He's getting paid like management fees from BM&R. He's made money from this. He's made money from allocating $10 billion to ETH above 3.5K. Like that's the part of this capital allocating business is he's in the green. Everybody else is in the red. He's in the green. It is a brutal spot because I don't know. I don't really want to bear post crypto today because I was doing it last night because it was fun and I was enjoying it. But now it's kind of not fun. And I just don't know what it would take to get this Bitcoin. I get other coins, some alts. I get what it would take to get ETH back above 5K. I think is like a country miracle. Also, really quick, if you're watching on YouTube or Twitter and you would like to chat, twitch.tv/threadguy. There's a lot of people over on YouTube. Come join us on Twitch. It's fun. The chat is lit. Stretch is crazy, by the way. I've seen a couple more people tweet that there probably is some type of hero short on Stretch. I'm not going to be the one to do it, but this is, I don't know. I don't think I'm smart enough to have money in this thing, really. I don't. What you're looking at is the Stretch chart. It's supposed to be, in theory, pegged to 100. And if it's above 100, they take the profit and they buy Bitcoin. If it's below 100, they offer you more yield on your cash. And so I think it's 11.5%. The lower it goes, the more yield they have to offer, in theory, to incentivize people to buy so they can get it back above 100 and buy more Bitcoin with it. No, it's not pegged. It's like yeah. It looks horrifying. They bought 1,000 Bitcoin today. But I don't know enough about this to have a real take on it. Really, I don't. I don't know what to tell you on this. Does anyone hold stretch? I know Eli's likes it. I know there's a few people that like it. Does anyone hold stretch? I know some smart people do, but yeah. Near down 5%. Bonds are all down. Bond yields, which is nice. VVV down 3. Sol's down 1.7. And XMR got crushed today, down 11%. Zcash, as it sits, is under 550. Our energy and oil names. Number 1, crude oil is 89.40 a barrel, up about 1%. Brent is up about 0.23% at 92.72.5 a barrel. Defense is very interesting. First and foremost, Palantir put in a sick candle. This actually makes the chart look pretty interesting. It's up 8% on the back end of IGV pump. 8%. Honestly, leading the way. Is anyone long Palantir, short Palantir? Our other defense names are up about 1% across the board. These charts look pretty brutal, but are seeing a little bit of recovery. Long Palantir till I die. In from 134. I actually have made money on Palantir. It was fun to trade when I was in it. I think it looks pretty good. It looks pretty good. Yeah, you know, if you really think about it, Palantir is one of the only Trump stocks that hasn't really gotten a pump. Right? Like Trump, it's actually the only stock that I can recall where he tweeted the ticker. Yeah, look. Hashtag Palantir. He tweeted the ticker on this. Palantir Technologies, PLTR, on April 10th. Has proven to have great warfighting capabilities and equipment. Just ask our enemies, President DJT. So yeah, the problem is it's like 300 XPE, but the good side of it is it's like a proxy for government and defense. And Trump tweeted the fucking ticker. So it's an interesting one. It'd be a fun one to continue to follow. All right. Semis, big AI, everything in between. Crown, Santa, hello. First and foremost, ARM is now up 54% from the Contra bull post. This thing is a fucking monster. Plus 10% on the daily. Crazy. Second biggest on my list is Space. About to make a new ATH. Redwire, RDW. This is a wild chart. I don't have a huge Space take at all. Is anyone long this? It's a pretty unbelievable chart, and it's going for more. I wish a lot of this stuff was on Trade XYZ. I mean, it's going for more. I am friends who work there. What do they think about it? Friends who work there. What do they do? Space Robotics is a Fugazi pump too early. Oracle is up 6.67% and started to print a pretty sick chart. AMD up 5, QCOM up 4. I can't say publicly a fair. Microsoft looks interesting. 3.5% green on the daily. Bill Ackman is firmly now in profit, and this is its best day in a while. It's best day in a while in Microsoft. SanDisk up 3, Marvell up 3, ASTS definitive all-time high. Space as well. I mean, look, you look at this chart, kind of gets you bullish RDW, right? It's like if you look at ASTS, ripped a new all-time high, very similar chart physiognomy to this, I would argue. That is ready to make a new all-time high. So we'll watch those two very closely. Adobe up 1.3%. This thing looks so fried. Broadcom about to make a new all-time high, up 1. Nvidia up 1. Amazon up 1. Apple up 0.5. ASML up 0.5. Tesla up 0.4. The pit is now firmly in the red on our average short entry. Not mine, but yours. Google up 0.3. Meta flat. Didn't gain any, but didn't give back any gains after its announcement yesterday of AI subscriptions. Micron, first red day in a while, down 0.5%. Intel down 1. Netflix down 1, Bloom Energy down 1.3. Rocket Lab, our leader in space. God, I love this. I love this too, brother. Rocket Lab, our leader in space, that's public, down 1.4. Nokia down 2.5. Sive, the Serenity stock, is down 5. Cerebras is down 10% on the day. Pretty disgusting chart that has been printed by Cerebras. From first trade, correct me if I'm wrong, it's now down definitively 30%. Everyone that's ever bought it is in the red, except for the people that underwrote the IPO. And I don't know if it's a liquidity problem, if it's a price problem. I don't entirely know what it is, but Cerebras is definitively down. And then last but not least is Aerospace Firefly, ticker FLY, is down 13%. Pretty wild chart on this thing as well. It looks like the pump chart if you're a ball knower. Looks like the pump chart. It actually looks very similar to the pump chart on the first. Look at this. Look at this. Look at this. This, down only, little pump, not ready, and then a rip into this. Down only, little pump, not ready, rip. Looks very similar. Chart physiology. Okay, coming on to consumers, some of our SaaS names, and the lists are kind of a mess. Robinhood got a sick little. Oh, we saw. Where was RoboStrategy? My bad. I forgot that. Bot. Here it is. Up 1%. All right, Hood is the leader on this list, up 12% on the news that Trump accounts are live in Robinhood. Any Robinhood chats in the chat? It's AI trading is live, but that's not why it's up, in my opinion. That didn't move it. That was announced yesterday. It had like a 1% day. Kind of a nothing. That's kind of a nothing burger, in my opinion. I don't know how you could trade Hood when Hyperliquid exists, but different discussion. Figma leading the way, up 10%. The worst stock of all time gets a sick day. Reddit up 9%. And from the emit public entry, it's up 17% in 2 days. 2 days. 70% in 2 days on emit. And this thing looks really good. Really good. Nebius is up 9% on news that Leopold Aschenbrenner has acquired 5.5% of the company. Is crazy. Shopify is well up 8%. Partnership with integration with Reddit, and it is up 11% from Emit's public entry. You got to give the guy some credit. He banked 2 of them. Open Door up 7. ServiceNow up 7. Circle is up 5. SoFi up 5. Coinbase up 5. It's crazy. Enhanced Games up 4%. The worst chart of all time. XYZ is up 4. Eli Lilly up 4 into a new ATH. It looks pretty crazy. Ferrari Race is up 4. Is fully retraced the dump after the announcement of their electric vehicle that people that were not fans of. Nike up 3. IGV, we already went over, is up 3. Sweetgreen up another %. UHR, the Swatch Group, is now up 17.5% since the reveal of the AP Swatch. Hims up 1%. Biggest losers are Ren down 6, Caterpillar down 3, DraftKings down 2, MicroStrategy down 1.6, and dear God, this thing is pretty terrifying. DoorDash down half, Texas Instruments down half, GameStop is flat. eBay is now lower than when Ryan Cohen submitted a buy offer to take it private at 125 via GameStop. And last but not least, Take-Two Interactive is down 0.27%. Look at the eBay chart. It's lower than when Ryan Cohen submitted the bid. It's crazy. Fucking crazy. Just take the goddamn offer. It was 117. It's 112. Take the fucking offer. Altcoins. Oh, brother. XPL is the leader. Everybody's going to die. Say up 5. Lighter up 2. Biggest losers, Jito down 12, Monero down 10, Mega ETH somehow down another 10%. I guess we'll add XLM. Fuck my life. Fine. Up 20, my God. Nice move. I gotta get a better chart. But nice move. Let's do a quick check-in on quantum stocks as well. We're gonna do a full segment in this in a minute, but IBM was the 5 stocks that got a grant from Trump. First is IBM, it's up 4% today. Second is GFS, it was flat. The third is QBTS. D-Wave was up 7 today. The third is Rigetti, RGTI. Rigetti was up 10. And the fifth is INFQ. Inflection is up 15. I'm very compelled to buy one of these Trump names. Mando. Is that a different Mando? Thank you for the gifted. I would also focus on the ones that French are backing. We can go there, but I am really curious about entering one of these Trump quantum stocks. I think is probably a pretty good idea. You see what happened to Dell. We'll cover the drone companies in just a minute, and then last but not least, let's check in on chain. Is it a disaster? Knock looked good yesterday. Nothing crazy. Octra still green somehow. Neat 37. Cards 42 mil. Utia 20 off a cliff, crushed. And how about Railgun? 180 mil looks pretty good. And Asteroid, God, I'm sorry. Quant. And nothing else on my list that I seem to care about at all. And last but not least, quick Hyperliquid check-in. Go like this first. SpaceX is at 198 on Hyperliquid. Do you think of any takers for open source AI? I'll come back to you on that. And then let's check in on our favorite traders. Number 1 is Loracle, who at one point had a UPNL of $41 million a week and a half ago. It's now plus 12. He's down 27 mil on hype. He's up almost a mil on a Bitcoin short, up 125K on a VVV short, down 26K on a NASDAQ 100 short, up 18K on a lighter short, down 16K on a Tesla short, and down $96 on a ton short. This one has gotten pretty brutal, really. It has gotten brutal. Please don't clip. But, yeah, I mean, he's still got $21 million of margin in this Hyperliquid trade. It's down 27.6 mil. It's like fucking unbelievable. And then the second is, I think this is Garrett Bullish. See, yeah. Second is Garrett Bullish. He's already sold 20 mil of hype near ATH for what it's worth. Yeah, I mean, I know he has a second account. Everybody was very adamant that this trade is just a hedge, but it seems to have spiraled out of control, for being honest. Now, who am I to comment? He's way more money than I have at the moment, but it does feel like it has spiraled out of control. And then second is Garrett Bullish, who took a very weird pair trade, long Bitcoin, short Zcash. The ZEC short has done unbelievable. It is up $4 million. Entry is 626. Current price in Zcash is 556. But his Bitcoin long is down $3.1 million. He's in from 76,117 on a 5x long. And it's sort of fucking his P&L. So he's still net up an M, but it has definitely cooked his P&L. Let's check his Zcash real quick. Yeah, I mean, this chart looks great. Sorry, it looks great. Don't know what to tell you. It looks unbelievable. It looks unbelievable. So that is where we end market close today. So a couple of our biggest stories here. All right, number one is we had news of another ceasefire, which we're going to spend hardly any time on this. Also, one more time, if you're on YouTube or Twitter, you want to chat, twitch.tv/threadguy. Also, we're going to save all the crypto. We have Ryan and DeFi Monk in 27 minutes. Here it is. So SSDD, US and Iranian negotiators have reached an agreement on a 60-day ceasefire of understanding to extend the ceasefire and launch negotiations on Iran's nuclear program. But President Trump has yet to give his final approval. I mean, these have gotten ridiculous, seriously. How do you come out and you basically say, we have a ceasefire with Iran just as long as Trump agrees and as long as Iran agrees? There's no ceasefire, okay? I hate to use this term again, but it also feels like we're getting back to diminishing returns on these announcements, because it's like, man, how many times can we pump on this ceasefire news? I don't know. You know, the number one rule is to fade war, but how long can this go on? Really is crazy. So I don't know. It does feel like we are pumping less and less on each one. And I will show you on the chart where I kind of like rage sold is we got the ceasefire announcement. Zcash did this. And then I just retraced it right back down. And I was like, fuck this shit. I'm done. Fuck this shit. I'm done. But I don't know. There definitely is some diminishing returns happening. And it felt like that headline was so ridiculous. I'm like, what am I reading with this fucking headline? It's like, there's a deal so long as Trump and Iran agree. There's no deal. Strait of Hormuz is closed. We have an energy crisis, but oil's down only, stocks are up only. And why, just like crypto, why are you going to try to fight that? There's no reason. I did become a forced seller on the dick and balls pattern, which I have warned against many times. On the news of Robinhood, this is a pretty fun story. Hood launches Trump accounts app. And so Robinhood has released its official Trump accounts app. Parents can now open a Trump account to invest in their child's future. Eligible children born 2025 through 2028 will receive a $1,000 starter contribution from the U.S. Treasury. The app is available for download today, a major step toward long-term financial security for millions of kids. Is this app live? Is it a different app than Robinhood? Should I check? What's it called? Like Robinhood, Robinhood. What's it called? Robinhood Kids? Trump accounts. Oh, it is live. Wow. Trump accounts. Official app. Whoa. Build a stronger financial future for your child. Trump accounts help eligible American children begin building long-term financial growth from early age. It says nothing about Robinhood. Is that weird or no? My daughter born 2023 GGs. Yeah. It doesn't say a single thing about Robinhood. I wonder why. Robinhood made the app. I know, but it doesn't mention them at all. Why? Anywhere. They have the copyright at the bottom, but it doesn't mention Robinhood at all. Yeah, my phone's cracked as fuck. Yeah, it's a cool announcement. Like, it's pretty cool that it pumped on this. I wonder, does this make like it's a little bit weird that Trump doesn't talk about Robinhood that much. Like, does this make Robinhood a Trump darling account? I wonder, or a Trump darling stock. At work, we had to tune in for a second. Say what's up. What's good? In my opinion, it doesn't either. I actually think Trump has treated Robinhood very weird during this Trump account thing. Like, it doesn't mention them in the app anywhere, which is like, okay, they built it, but fine, but no clout. It's a separate app. So it isn't like Trump is directing people to Robinhood to get these Trump accounts. So it's a separate app. They're not mentioned anywhere, which is a little bit weird. And then in the press release, which we read a couple streams ago, when they talk about Trump accounts, the only thing they say is like, God bless you, Michael Dell, for the $10 billion investment. That's what it says over and over again. Bless your heart, Michael Dell. Michael and like Miranda Dell. Bless you. And then has Robinhood's logo listed next to like Chipotle, ServiceNow, and DoorDash at the bottom of the sponsors. Like they don't really get that. I don't know. They don't seem to get that much publicity from it. And so they get the AUM though. That's all they care about. I don't think it's going to be that much. What would the AUM be? I don't think it's going to be that much. Wait, let's see. Also, 4.8 drop. Does anyone use 4.8 yet? How much AUM will Robinhood theoretically get from the Trump accounts live for the next years? What percent of AUM? Yeah, it doesn't feel like it's going to be some massive boost to their metrics, if I'm being... It doesn't really feel like this is a typical Trump stock, if I'm being honest. Did you see someone on Twitter predicted they'll actually have done? I did see that. Because the thing is only doing it for 3 years. Like it's a very like it's a very they could theoretically add 15 to 60 billion of platform assets. Oh. $4 to 17%. That's a lot. 345 billion total platform assets. The monster upside is not to $1,000 seats. Whether parents employers keep actively contributing. A $1,000 treasury seed deposit. They can contribute up to $5,000 a year. So if you have 14.5 million kids and each of them get $1,000, that is baseline 14.5 billion, which is 4.2% of Robinhood's current platform assets. Well, I wonder what kind of multiple they get on their assets. Huh. It's actually a decent bull case. I'm not going to lie. This is a decent bull case. Because you also get well, okay, the two sides. In theory, you have an entire generation that's now growing up, like banking with Robinhood, right? But it's a separate app. But it is Robinhood. Yeah, that's a reasonable bull case. I'm not gonna lie. Over, because I always say like, why would you buy Hood when hype exists? That's a reasonable bull case. I'm gonna be honest. The problem is you gotta hold it for like years. Let's look at the chart. That is a reasonable bull case. I mean, that's 5% of their AUM alone. If everyone gets the free $1,000 and contributes nothing, and then you have like a legacy of families that are never gonna leave Hood, it is reasonable. If this thing gets above 100, it starts to look pretty good again. You got Leclerc winning Monaco. I haven't followed Formula One in a while. Interesting. So that's Trump accounts, which is a cool announcement. Two quick rapid fire on Anthropic just to update you. I haven't used it yet, but Anthropic just launched Opus 4.8. And yeah, actually real quick. Chat, how long have you been with your bank for? Like, I got Bank of America when I was like 14. And I have never switched. And they kind of suck. Dude, my bank just fucked my credit, by the way. Bank of America just fucked me. I had fraud on my credit card. SoFi. I had fraud on my credit card. And I locked it and didn't feel like ordering a new card. So I've just been using a debit card everywhere. And I had like $100 payment to pay off on my credit card that I forgot about because my card was frozen because there was fraud and I didn't feel like getting a new one that I completely forgot about. And they sent me a letter in the mail and they bumped my credit down to $1,000 a month. And I'm like, bro, I've spent an unfathomably large amount of money on Bank of America credit, and I've never not paid it back. And they just nuked my credit because of $100 payment. It's so stupid. It's actually so stupid. But anyways, Claude announced and just released Opus 4.8. Has anyone tried it, and what do you think? I think I still stick by the Danielson Railroad thesis, which is my favorite, which is as long as each model continues to get better than the last, CapEx is financially forced to continue to go up only, and there's no way for the market to slow down. Actually, no way. They also are teasing Mythos very soon. I mean, I think it's a very, very simple thesis. As long as each incremental model is better than the last, these labs are forced, and all the companies related to the labs are forced to spend more money, because theoretically more money means you can beat the most recent model and play this game nonstop. Like, it's a very simple thesis, and I don't understand why it wouldn't work. As long as each incremental model continues to get better by throwing more compute at it, which means spending more money on it, then we're going to continue to go up. I don't see what would stop that until you take a significant regression or a significant increase in CapEx spend and money thrown behind a model that is worse or doesn't get better. Until that happens, there is no reason for the music to stop, in my opinion. I haven't tried it yet. I've seen mixed opinions, but to be fair, this thing released a couple hours ago, so how does anybody really know? So that's Anthropic number one. Anthropic number two is that they have raised $65 billion in a Series H funding at $965 billion post-money valuation. Congratulations to Anthropic, but this is disgusting. This is actually disgusting. It's disgusting, bro. Series H, it is disgusting. I mean, it's like, it's honestly such a fuck you to retail traders. Somebody has to solve this. Somebody has got to solve this. Series H is ridiculous. Someone has to solve this. You have to solve this. It cannot be pre-IPO perps. Like, there's pre-IPO perps, as in SpaceX is going to IPO in a month, and we're speculating on, first tick when it goes live, versus Anthropic might never IPO, and we're speculating on nothing. There's not the same thing. They're not the same thing. Somebody has got to solve this on nobody going public. I have this like mini theory that the lack of companies going public is going to lead to this explosion in public SPVs, which are going to trade at massive multiples, which would leave room for some of these pre-IPO perp vehicles to catch a lot of volume and a lot of adoption, which would then force companies to go public because you're basically already public. But the problem is these pre-IPO perp vehicles, what are you even trading? Nobody knows. And I can't, in my right mind, recommend you trade Ventuals Anthropic. It's like, you can't trade this thing. Look what happened on SpaceX pair on Ventuals. Which, by the way, I like Ventuals. They came on. By the way, if you're a real OG, threadguy stream, we had Ventuals on like 8 months ago. Look at this. I mean, look at this. Who's trading this? Look at this chart. Look at it. Look at the wick. Look what just happened. And so if you were long and at any type of stop loss anywhere, you just got walked out on slop. It's like, it's complete. It's nothing. And I know there's a better one. There's the Trade XYZ one, but this is I mean, this has 3 mil OI. This is not nothing. This is not nothing. And so you just can't trade these, It's been a good trade, but there's 400K daily volume. I mean, you just would destroy the chart. No, it's not the old ticker. It's a different one. There's 2 of them. There's the Trade XYZ one, which obviously is better. But there's two of them, and it has volume. Like, it's not nothing. It has volume. The Ventureless one. It's got volume. There's 3 mil OI on this. 5 mil 24-hour volume. It's not nothing. And so this is the problem with these pre-IPO perps. It's, by the way, I think it's different between pre-IPO perp, Cerebrus, it's going to IPO in 2 weeks for a fact, and then Anthropic, which is like whatever. I think they're very different. I don't quite understand the intricacies, but it's very different. It's not the same thing to me. It's completely different. So yeah, they've got to do something about that. I mean, congrats to Anthropic. Great to see the rounds getting bigger and bigger and bigger, but they've got to, someone has to solve it. This is ridiculous. Seriously, this is ridiculous. It's just like retail, just get fucking cooked. Get cooked. All right, one more topic before we get Ryan Watkins on is Trump. So Trump has recommended us some new buys, which we're going to talk about. That, I mean, it's basically a Trump KO market. So I have this old tweet from May 21st. Wow, this is, how is this 7 days old? It's crazy. 7 days old. Sorry, I just sent a message. This is 7 days old when Trump came out and said the U.S. is granting $2 billion to 9 quantum computing firms. These were the 5 biggest. And then France came out right after and announced $1 billion behind it. And so there's definitely some alpha in some of these names. At the same time, TradeXYZ just announced a pre-IPO perp for QNT that I don't really know what this. Let's actually look at how this is trading. Let's look at this trading. $2 million in volume instantly. We should actually look into this. This is my biggest new equity position. Actually, their holding company, Honeywell. What is Honeywell? Honeywell International is an American multinational conglomerate that manufactures technology for commercial and industrial applications. Headquartered in Charlotte, North Carolina, the company operates across 4 primary segments. Just holding to QNT IPOs, aerospace, building, automation. Interesting. Good to know. So anyways, this is live on, wait. This is live on TradeXYZ, which we'll follow very closely. I spent this morning looking at these 5. IBM is fucking expensive, and I don't think it's the most direct quant to play. But some of these other ones are very interesting, and maybe we'll do. I don't know. Maybe once Ryan Watkins gets off, we'll look at them. But what I wanted to cover is this. So this headline just came out, Wall Street Journal, which are the Trump admin is in talks to fund U.S. drone companies. This has been the most profitable trade. Is tail whatever Trump says to buy to just buy. It just so happens that Don Jr. backs 2 public drone companies, UMAC and PUSA. Previously a publicly traded golf course company that Don Jr. reversed merged with PowerUs, the drone company he backs. UMAC is specifically named as one of the companies in talks to receive a government investment. What a coincidence. So here's the announcement. The Trump administration is pursuing funding deals with a group of drone companies as part of its effort to increase domestic production and lower the cost of the increasingly vital weapons. People familiar with the matter said the potential deals follow months of discussions between a diverse set of private sector drone companies and the Pentagon, the people said. The discussions have included the Office of Strategic Capital, a lending office set up by the Biden administration to fund companies deemed important to national security supply chains. The deal talks are still in the negotiation phase. The people cautioned, and Pentagon dealmakers are continuing to vet the companies before finalizing. Well, let's look at them. Number 1 is UMAC. Funny how the companies getting these U.S. deals happen to be taking investment from Donald Trump Jr. Well, it's worth $1.4 billion after pumping. Is a $700 million meme coin, basically. It is up 57% on the daily. A monster candle. Just a fucking monster candle. Up 57% on the daily. And the second one is PUSA, which used to be a golf course that was reverse mergered. Is what's going on here? What the fuck is this? Up 17.5% to $100 million. What is this? Why does this look like this? Yeah, it was a golf company. Why does this look so terrible? Dude, it's $100 million. Huh, what the fuck? If you're in golf, pivot to drones. PUSA. Let's see. It's not even updated, bro, on CNN. Engages in the ownership and operation of public golf country clubs. It's not even updated. What the fuck is going on here? It operates through the following segments: golf recreation, retail golf products, and equipment and facilities rental, membership dues, food and beverage services, and ancillary services and amenities. Bro, it's not even fucking updated. The golf recreation, retail golf products, and equipment facilities. Net income minus $1.26 million. What the fuck is going on here? Wow. That is... I mean, this is a literal shitcoin, ladies and gentlemen. It's worth $93 million. $93.33 million. It's down 2.5% after hours. It was up 17% on the daily. I mean, do you just, like, what do you do here? Do you just buy this on the back end of... It's a great day to be a drone company, especially one that's backed by Trump's sons. UMAC was the leader. It's up 50% year to date. PUSA was number 2. RCAT and LTRX. There's quite a few that are down year to date. What is RCAT? It's traded really well. Redcat Holdings up 32% today as well. This is $1.74 billion. I mean, these are tiny companies, man. These are so small. Yeah. That is wild. Let's add it to the list, I guess. PUSA. I mean, bro, CNN still thinks it's a golf company. They're going to win $1 billion contract from Trump to build drones for the U.S. It's a $93 million company. They're going to win $1 billion contract? Really? That feels far-fetched, but Donald Trump is an investor. Huh. That's fucking crazy. Hype factor 61. Is that true? Let's see. Hype is 61. Wow, it looks great. Zcash 556. ETH, terrible. Yeah, that's wild. This is pretty crazy too. And this is why I'm saying, do we just close our eyes and buy these drone companies? Maybe. Luke, DeFi Monk is here. I'm gonna let him in, okay? Give me confirmation. I'll let him in. I'll let you know when Ryan's here. Look at this. DELL just won a 5-year, $10 billion Pentagon software agreement for the U.S. military. But Trump also bought DELL. He bought multiple times since February 10th, up more than $5 million. On May 8th, he said, go out and buy a DELL. Unusual. If you look at this chart, May 8th, when he said go out and buy a DELL. No, sorry. May 8th. If we were to look at this, don't mind if I do. Just slide it right over here to current price. It was already up so much. It's up another 50% since that. Up another 50 since that monster. Yeah, it's crazy. This was also after tech billionaire Michael Dell and his wife Susan pledged $6.25 billion to fund and incentivize investment across accounts for 25 million American children. I think if we were in the weeds right now covering the way we cover stuff like we were back then, you probably catch that as unusual. Also, Easy Banked this. I got to give the guy credit. Trump this is on this was today, but he quote tweeted from May 6th. Trump quite literally told us May 6th to go buy Dell. Dell just won a multi-billion-dollar government contract. Trump also bought Dell. It's up from 214 on May 6th to 323 as of right now. It's up more than 6% after hours. It's up 10%. Let's see the contract. Dell government contract. It's a fucking monster. Yeah, 2 hours ago. Dell gets a $10 billion defense contract. Trump's portfolio stands to benefit. Shocker. President Trump earlier this year purchased more than $1 million in... I'm surprised he didn't buy more. $1 million in stock of Dell Technologies. The transition that is drawing scrutiny after the Pentagon this week announced a $9.7 billion contract with the Texas-based computer company. The sequence of events illustrates the complication that emerged when the sitting president continues, even through financial advisors, to buy and sell publicly traded stocks like Dell. In the first 3 months of this year, we've went over his trades. He's executed 3,600 trades. A Dell stock purchase between 1 to 5 million. Trump family has argued that president does not personally control the trading. This is actually worse, by the way. Saying that they're automated by outside brokerage firms. It's probably worse if he's not executing the trades, because who the fuck is? And Trump went out of his way in February to praise Dell Technologies and its founder Michael Dell at an event in Georgia. That took place 9 days after Mr. Trump's purchase of 1 million Dell stock. I mean, this sort of makes me feel like, damn, Palantir, right? Is like a close your eyes, don't overthink this one. Well, what Trump PO tweet? The chart doesn't look that bad, really. This was on April 10th. He tweeted this. Let's see. Where was it on the chart? It's a good one to mark. I like the way we mark our charts. You know what's crazy? It was right here. Pico bottom. He tweeted this shit. Unbelievable. He tweeted on fucking support. On support is nuts. Dog. He tweeted it like on a fucking hammer wick. That's unbelievable. Why? That is, I mean, that's a guy that has exposure, no? Look at this. Bottom ticked it. That is fucking crazy. We do need Andrew. I know. I would love to have exposure to Andrew. I really would love to have Andrew. Don't think it was in his filing. Not sure why. Yeah, that's a little bit weird. Also, in like 1 minute, we are going to interview Ryan Watkins and DeFi Monk, because notice we talked about stocks, SaaS, Robinhood, Dell, drone companies, Quantum, Palantir, everything in between. We're going to talk about Eli Lilly in a minute. We're going to talk about mergers and acquisitions in a minute. We're going to talk about layoffs. We're going to talk about a bunch of stuff. But the one thing we have not talked about yet is we have not talked about cryptocurrency. We have not talked about crypto. And so that's what we're going to do. We have Ryan Watkins and DeFi Monk from Secrecy Capital, who are, I mean, I think Ryan's one of the best, man. I'm going to be honest. I think Ryan's one of the best. DeFi Monk is awesome. And I mean, other than our resident Mr. Thinking USD, I think they're probably two of the biggest hype bulls the entire way on this trade, and definitely deserves some credit. This is Ryan. Big fan of Ryan. Friend of the stream. He's been on a bunch of times. They got the thesis from me. But you know, Flood won't come on the stream. So how do we know that? How do we know you didn't get it from them? You know? How do we know you didn't get it from them, Flood? Because, you know, there's only one guy coming on talking about him buying hype since the lows. That's all I see. That's all I hear. That's all I know. You know? That's all that I know. But he wrote a really good article. He wrote, I guess maybe it was this. It was called like The Great Purpification of the World or something. Yes. March 16th. It's basically the ultimate like hyperliquid bull post. March 16th. If you peep this thing on a chart, March 16th, hyperliquid bink. 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 Pretty sick. That's pretty sick. Come on, that's pretty sick. On a crypto coin, that's pretty sick. From the article. From the article, it's pretty sick, I must admit. VV looks good, Dan. Let's see. We have like a minute here before he joins the waiting room and before I get up, so I'll look at a couple charts. What do you got? Dude, all right, he's in, Luke. I'm going to let him in, and I'm going to get up, and then when I come back, I'll be ready. All right, guys, I'll be back in like 1 minute. I can't play music because we're in the waiting room talking, but I'll be back in a minute, and we're going to do a quick little crypto interview. BB. All right. Let's do this. Thanks, Luke. Thank you. Wait, what did Flood send? Valencia jeans and a hyperliquid hoodie. I'm ready for war. October 25th, 2024. It's not pre-TGE. Oh, that's so good. Let me just tweet that we're live. Luke, tell him I'm coming. All right, let's do it, guys. Yo, yo.
Yo.
He's above Mello right now, by the way.
Yeah, he's above Mello right now.
Yeah.
He's above Mello right now, man. It's good to see you guys.
Are you a Knicks fan?
No. For like the next month.
You're from LA,
I'm a
right?
Lakers
He's
fan.
from LA, bro.
Yeah.
I'm a Lakers fan. I'm a Knicks fan for the next like month, you know? Party in New York,
Yeah.
man. How are you guys?
Yeah.
Welcome back. It's been a while.
Yeah, good.
Yeah.
It
Nick-
go ahead.
No, I was just gonna say, can't complain. Knicks in the finals, hype at all-time highs.
Almost at all-time highs. It's an interesting time for you guys to come on because I think crypto is what I'm the most excited to talk about. Hyperliquid, perps, all of this. There's crypto sentiment. We always talk crypto sentiment. I feel like it's been a discussion for a while, but and I always say like It's the lowest or it's the weirdest, but it's in a particularly unique spot this week where you have Hyperliquid above 60, I think 61 right now. We were just charting your great purification of the world on the chart and where that was, which has played out very well since you posted that. Hyperliquid's above 61. Zcash has traded really well. Things like VVV have done well. There's a couple spots. And then Bitcoin is just chudding along and everybody is just rage quitting. And so you basically
Yeah.
held Hyperliquid, longed Zcash, or you are ready to get carried out. So I guess I'll go to you first, Ryan. We'll go to DeFi Monk and we could just sort of go round table on this. Is like, what do you make of the separation between sentiment and like price action where we are with Hyperliquid and then what everything else is, what everyone else is feeling in crypto, how everything else is trading? How are these two things so separate? Why does it feel like this right now?
Yeah, you know, it was funny. I think this is my third time being on here, and every single time I come on here, it's always just like, oh, sentiment is so shit. It feels so bad, and like it almost feels like we're kind of on here to kind of give a reason for people to believe. It's just funny how it happens, but yeah, I think so to me, one thing I've always thought about is at some point we're gonna have some level of decoupling across the asset class, some dispersion. It's just a natural maturation process. Like as you start to get more sophisticated investors, as you start to get more higher quality projects, and especially projects whose fundamentals just aren't tied to the cyclicality of crypto, like obviously you will have some things that just don't trade one-to-one with Bitcoin. Now, are we there yet? I'm not sure, but we do have things like Hype and ZEC and VVV, which are starting to separate from the pack. And it actually makes sense. And in fact, I think this makes more sense than any kind of like previous decouplings have, because let's just take Hyperliquid for example. Like what is actually driving a lot of the growth in volumes? I saw like some people today talking about how Hyperliquid fees have been relatively stable throughout the past 3 months, despite the fact that like price has gone up and obviously the volumes are going up, open interest going up. It's because it's all like the equity and commodity stuff that is like lower margin because you have growth mode on, that is actually driving the growth, right? And same thing with I think VVV is also not, to me at least, not same level as Hyperliquid, but similar situation where it's just like compound growth, like there's nothing to do with what is the price of Bitcoin. It's just, are people signing up for Venice or not? People are signing up for Venice and they're paying money. The hell does it have to do with the price of Bitcoin, right? It doesn't have anything to do with it. And I think there's like more than enough capital that is in this asset class where if you have some assets that are really doing well and proving themselves, that they can go up even if as a whole the entire asset class is not getting a ton of new inflows. So I think this makes sense. I think it's like a beginning of what this asset class will look like moving forward, which is that you just have to be a much sharper asset picker because rising tides doesn't always lift all boats anymore.
You do have to be really sharp right now. Like there's a couple spots. If you hit them, you feel great. If you didn't, you are in a you've underperformed, especially because the risk to reward, or I guess opportunity cost to be trading crypto right now is high. I mean, Monk, what do you think about our
Super high.
select basket of alts right now that have done relatively well, all things considered?
Oh, you asking me?
Yeah, go ahead.
Yeah, no. I mean, I think what you're seeing right now is kind of an asset class that has historically been populated by traders, kind of shifting to an asset class that is more fit for an investor, and that's causing a lot of dissonance within the community. And dude, I get it. Like if you are down on your BTC longs, I mean, I'm frustrated at BTC too, and you're looking at semiconductor stocks going, like putting up 10% daily candles just like 4 or 5 days in a row. You're like, why don't I just leave this garbage asset class and go long these other trendy momentum assets? And you can do that. Like, I think that's perfectly fine. Um, but I think at the same time, there is a structural edge to having been in crypto over the last 5 years, to where something like Hyperliquid, I mean, we've had now, I mean, Hyperliquid, I mean, it's been live since 2023, but the points program didn't really start till like 2024. And then it TGE'd. And so we've had now, if you've been in crypto multiple years in a row, of knowing what Hyperliquid is, knowing who Jeff is, understanding the story, understanding the narrative. And now you're seeing all of these institutions outside of crypto, all of these exogenous flows go like, wow, this asset is a stud. Like I want in on this. And you, as a crypto participant, has now had multiple years of knowing what exactly makes Hyperliquid so special. And there are people that I'm calling who are just now going through this discovery phase of understanding why something like Hyperliquid is so special. And so that's a structural edge in and of itself. I think it sucks that it's such a low hit rate kind of phenomenon where we only have these few assets that are actually doing well. But if you're willing to lean into that edge, like we are at Syncrasy, and kind of go, hey, look, everybody is looking at semiconductor spots right now, but there's this asset called Hype, which we think is one of the best assets in all asset classes, not just in crypto. We think this could be a stud in equities. We think anybody who understands a narrative will be incredibly bullish on this thing. And so you can just view that, you can flip it and kind of view it as an edge. Like right now, there is edge in crypto if you're just staying in here, if you just know what's going on. And I think what's different from now and before is you really need these protocols to start making some sort of real impact outside of crypto, which is what VVV, which is what Hype is doing. I think Zek is appealing to investors outside of crypto as well. Like you've got to find a way to get your story out there beyond just a crypto circle. But once it gets there, you do have an edge in knowing what exactly is actually going on behind these assets.
You know, I'm more excited to talk about the upside of some of the things that are doing well rather than, you know, why is everything else so bad? On the Hyperliquid discussion, I'll ask you, Ryan. It's like, okay, I think everyone in crypto unanimously agrees perps are an incredible product. They're a superior product to what exists in TradFi, and the Hyperliquid business model is like undefeated. But the valuations do start to get like a little bit lofty from here, especially once you've captured everybody in crypto. The question now becomes like, what is it going to take from a storytelling perspective for the rest of retail? I think Hyperliquid has like 15,000 DAUs, something like this. Maybe I made that number up, but I had that number written down, 15,000 DAUs. What is it going to take to convince the retail world that perps are better than options? Like, is this like a job you have to go out and spearhead? Or you on Reddit with like a new Wall Street Bets? Like, how do you actually acquire these new people into crypto? Because I think that's what makes the story so interesting.
Yeah, I'll actually let Monk take this one because he's been doing a lot of work recently on like Hyperliquid valuation FDV. That I think is like a good.
Also, what is our FDV that we're using? Give me that as well.
Yeah.
I mean, sneak peek. We're going to be putting out a report on this soon where we just kind of, because we've been getting this question all the time from people who are not used to crypto valuations. They're going like, what the hell is FDV? What the hell is circulating? What should this thing actually be worth? I mean, ballpark right now, like we think it should probably be somewhere in between, if not closer to circulating. And so that's a massive shift in the story, right? If all of a sudden Hyperliquid is not worth,
how do you get there? Like,
$60 billion?
Can you talk through what that means for all of the like FDV market cap, like where that goes, why you are not accounting for it?
Yeah, I mean, I've had a background in equities before, and there is no such thing as an FDV for the average stock. The way people look at dilution is they look at what is dilution going to be over my investment, forward-looking investment horizon, right? And so what is inflation going to be for shares of NVIDIA over the next few years? And then you kind of run your valuation across diluted EPS across that time period. No one ever sits down and goes, what is the maximum amount of shares that NVIDIA could ever issue over the entire history of the stock, right? And so I think now that we're introducing Hype to this more traditional kind of investor, we kind of need to speak on their terms. And the reality is like the 40% or so of supply now that is allocated for future incentives, I just don't think that makes sense to be including in any sort of real market cap discussion. One, we have no idea when and if that supply will ever come online. And two, if it does, I think there's a real chance that Jeff and the team decide to use it in an accretive way, where let's say $1 worth of Hype incentives generates like $1 or more of Hype buybacks. And so it's not really true inflation in the typical sense. And so what is inflation really? It's probably just staking rewards, which is pretty minimal, like easily offset by buybacks, and then it's just team unlocks, and that's basically what you should be focusing on. And we'll get more in depth in this when we put out the report, but that's basically I think what investors should use.
Do you think there's no way we're doing like another Hyperliquid airdrop, or he's just gonna like community hand these tokens out?
it's not that I don't think that's going to happen. I think it's unfair to put that into a market cap, like put that as your dominator within an overall valuation. When one, you have no idea if that's going to happen, and two, there's a very real likelihood that this could be sort of an accretive decision for supply.
By the way, it is a good point on stock dilution where we're not sitting here debating like how much are they going to inflate Nvidia. Like, this is not a discussion in valuations.
Yeah, it's a crypto specific thing, right? Because we're so used to getting dumped on by waves and waves of VC unlocks. But I just don't think that for this specific asset that FDD really matters all that much. And I don't think people should. I don't think hype is worth $60 billion right now. I think the market cap is the real market cap is lower.
Yeah, like I think in equities, there's like this concept of like authorized but unissued shares, right? And that's just like, all right, board proves that these shares can be issued, but no one issues it. I think that is very similar to what hype is set aside right now for future rewards and emissions, right? Like this is authorized, but it doesn't necessarily mean it's going to be used at all. And at least for me personally, this is my personal opinion. Like I don't know what the team thinks, but I don't see why they would airdrop any more of this. Like I get it at first. You want to incentivize people to trade, like it's a new exchange, whatever. Dude, people are already trading every single new product Hyperliquid puts out. People are trading it without being paid to do it. So why are you going to pay them to do it? It makes no sense. They're just going to sell it. All right.
It's a really good point. It's also like one of the first times I feel like we've had a token founder that's really cared about the token price. Like really tried to figure out how to make this token price go up. I guess, Monk, to let you finish, what is your take on the story aspect of it? Like, how do you one of the things I'm starting to see that is exciting is you see these more TradFi focused stock guys. Like Amit is investing. I watch him every morning from Market Open. He has like 11,000 concurrent viewers. It's a lot of viewers. There's probably like 300-400 people watching this across all platforms. He has like 11,000 every morning. And when he came on the stream 2 months ago, maybe 3 months ago, I asked him about Hyperliquid, and he sort of was like, I don't know, crypto. I hold Robinhood, but I'm not. I don't know. I've heard of it, whatever. A couple days ago, he's posting the SPX chart on pre-futures open on like Saturday. Hyperliquid. Everyone's in the comments. Hyperliquid. And he's posting Cerebras pre-IPO price. And so one of the things when I think about, especially the Trade XYZ eco, is that there's a lot of fence sitters. Like Malcolm had this point. There's a lot of fence sitters where there's a lot of people that are watching it, that are typing the URL into the browser. They're paying attention to the price action, but they're fence sitters. They're like, we say crypto curious. Like they're not actually clicking the trade button. They don't actually have a wallet. They're not actually executing the transactions. How do you go over that middle ground of the fence and like convert? How do you convert those people? Because it's kind of infinite, right?
Yeah, I mean, this goes back to the last part of the question you asked before that I didn't really get to, but we broke down the Great Purification TAM as starting off like in the first few innings as retail, right? And that's a huge segment. We don't need to even be looking at institutions for now to see Hyperliquid grow its addressable market by multiples from here. And retail, you can really think about it as two segments. There's like your traditional retail, like your aunt or your sister or your brother or your friend, your high school friend, who's just like trading stocks on Robinhood, and they're going about their day and they're going to their job. And then you have sort of your sophisticated retail investor, right? Which these are people on Wall Street bets, they're on FinTwit. And when we first started seeing the silver ticker and then the oil ticker on XYZ Hyperliquid start popping off, I started seeing a lot of these Twitter accounts that were on like commodities Twitter, on FinTwit, that weren't really necessarily CT native at all, start talking about Hyperliquid and start posting Hyperliquid charts and maybe even start like posting slips of their Hyperliquid trades. And I think that sophisticated retail investor is going to be your first entrant. That's the low hanging fruit. And the way you get them in is simply by offering them a way to make money, which Hyperliquid I think is starting to do. Like if you want to trade SpaceX and Anthropic pre-IPO, there's nowhere else to do that. Right? If you want to trade oil on the weekends, there's nowhere else to do that. Yeah. And I think that is going to be basically your user acquisition funnel in the early stages, where eventually people will start to realize they're actually losing money by not trading on Hyperliquid. And that's going to be the next step. for how we start to convert some of these passive sideliners who could be users but are not currently users. Down the line, I think with builder codes, you can get some interesting front ends that go like direct to your average retail consumer. But for now, I think we just need to show all these people that, dude, you're like losing money by not trading on Hyperliquid.
How ridiculous is it? Anthropic just raised a Series H. It's like, bro.
Yeah, I
Series H?
didn't even know the VC alphabet went that high.
Series H is disgusting. I want to ask you this, Ryan. Is like, I don't know how like what percent of your capital is like allocated to Hyperliquid, but it feels like it's a lot. One of the most difficult things I did trading, like I don't like regret this, but I look back, I missed out on a lot of money by going so overweight Bitcoin in like April 2025. We had all the scares, we had all like the tariff scares, markets get destroyed. I had a lot of cash. I like fully allocated to Bitcoin, which performed pretty well. We got 126K from like 75 or whatever. But I ended up round tripping it. And part of the problem was I had no ability to position in anything new because I was like, no, my Bitcoin, like spot Bitcoin, like I can't trade it. Like I just got very attached to the position. I was so overweight and I had no freedom or flexibility to like move in and out of anything new. So I'm just curious from like a capital allocator perspective. Like, I don't know, how have you been able to like be so seemingly tunnel vision on Hyperliquid, and how do you not feel the FOMO of like the semis trade and the AI trade and the photonics trade and the metals trade when that happened, while it's all like converging at the same time?
Yeah, well, I mean, the easy answer is that we just have a mandate to invest in crypto, so we can't like buy semis in the fund. But even think for myself personally, because at the end of the day, like there's a big opportunity cost. I mean, I even put like a tweet about this other day. There's a big opportunity cost of doing anything versus being in AI right now.
Yeah,
Right?
facts.
You could make a career change if you wanted to, and of course, it's not easy to just go and jump into AI into like an attractive opportunity. Like you build a career, you build relationships, and it's not easy to do it instantly. I think to myself, okay, well, what is the reason to be in this asset class? And what are the things that excite me? And you mentioned like kind of being tunnel vision hyper liquid. And in some ways, it's like, yes, it is maybe on the outside looks like tunnel vision, but what we're really doing is we're just saying no 1,000 times every single day to everything else. And one helpful framework that I think that we've developed for ourselves is and then I think it's almost like helpful for people, and I think many people in crypto already do this at this point, but like really invest in asset classes outside of crypto. Like invest, don't trade, like buy a real company that you believe in and just like hold it. And it'll train you to actually think like an investor. And you can like absorb more of the volatility, you can think long term, you actually think about the business, right? Now, if you do that and then you go back to crypto, it'll make you realize that most of these tokens are not businesses and you should not be investing in them, right? But for the rare things that are like real businesses and like actually meet that threshold where they're interesting to someone who doesn't have a mandate to be in crypto, like that's what you hold on to. And that's what you hold on to for a very long time because it's really hard to find those things. And I think for us, it's like, so long as this story continues to progress the way that we see it progressing, this thesis continues to evolve and get more exciting, it's not that hard to continue holding this thing. And one behavioral difference that I see this cycle versus last cycle is that in 2020, 2021, what was like the dominant mentality? It was hodl. I haven't heard someone say hodl in like 4 years or something like that. That's like no one says that shit anymore. No one like I feel like if you said hodl on the TL, people would be like laughing at you, right? Hodl, I low key think is making a comeback because over the past couple of years, people have been trained that okay, like the way to make money is actually to be in meme coins, and you got to be in and out. Like you got to be in perps, like go 5x long, and you got to make sure you're like you have the stop loss, you got to cut your risk, right? And I get it because in 2021, if you didn't end up selling, you probably round tripped a lot of generational wealth.
Yes.
So I get why people became more short term, and I get why this cycle, when all you're doing is meme coins and perps, you are short term because by the very nature of those instruments or those assets, you have to be short term. But to take advantage of some of these opportunities, at least that we're seeing in the market today, you can't really trade. If you're the kind of guy who's like trying to trade hype, you might have like sold 20, or then you like sell 40, and then you try to buy again. Before you know it, you're just bleeding P&L, or like you're eating a ton of fees, or you're eating like taxes by trying to do this. So, um, yeah, I don't know. Long-winded way of saying, I think that this is becoming like this is like the age of the crypto investor that's coming, and it's not going to happen overnight. And there's not like an abundance of opportunities right now. But I think as time passes, there's going to be more hyperliquids. Maybe it's not going to be like tomorrow, but maybe a year from now or 2 years from now, there's more opportunities that are similar to this.
I actually think it's a sick take on the trading time frame, where it's like everyone has shifted so far into perps, into meme coin, into the 0-day options, into like piling in on a move on a Trump tweet or on like a Serenity tweet or a Citrini tweet. The price action is so schizo, and you'll like be long and then it'll get stopped out, and it'll be long and you'll be stopped out, and you'll be like, man, if I just like close my eyes for 2 even like the difference in, you know, holding for 2 weeks, 3 weeks versus a day, a couple hours. I spent a lot. I mean, I spent like probably the last 3 months doing like intraday trades. And like, man, this is awful. I don't want to do this anymore. And you look at some of these guys that have played semis, where like it reminded me of like early AI season a little bit, where it's like sellers got punished. If you sold at any point, it was like, why'd you do that? If you traded hyperliquid, you got punished. Like, why did I'm sitting here like, why did I long hype 37, close at 32? Like, you know what? You got punished. And so, speaking of holding things long term, I might be misquoting you on this, but I feel like you guys have gone easier on ETH than most. To be relative, like, yeah, to be kind of optimistic about ETH amongst, I don't know. I mean, even Bankless capitulated. David Hoffman capitulated, which is crazy. I mean, I mean, I was here in 2021. That's crazy.
Yeah, we don't hold any ETH, to be clear. But you know, I mean, yeah, just on the topic of ETH, it's just one of those things where like everyone, at least on Twitter and amongst like my friend group, is so bearish on this thing at this point that I just have to start questioning, okay, like why is this thing still worth 200 billion? And
200 billion.
I'm not bullish myself. I don't own any. I don't have any interest in owning any. But I do want to keep monitoring this, because maybe the market is sending a signal that there's still a lot of value here. It's not worth $200 billion for no reason. It's not like arbitrary, right? And I keep thinking too, okay, maybe it's like a shit asset right now, but maybe a year from now or 2 years from now, it becomes investable. And what could be the reasons why? Who knows? Maybe it's because they like ZK everything on Ethereum, and now it's like a combination of BTC, ETH, and ZEC all into one asset. Maybe they get like a bunch of roles to start scaling, and maybe they get a bunch of enterprise to start doing it. Maybe they get a bunch of like payments to start working on it. I don't know. Like, you always have to be open to the future looking vastly different than what it is today. And I think that my fear is that if I kind of get too caught up in the whole like ETH is cooked hype, that you end up missing out on what could be like a great trade down the road.
Yeah, I think this is one of those assets where if you talk to somebody in crypto and then you talk to somebody who's in, let's say, like a finance role, he's an investment banker, or he works at a PE fund, or he works at a hedge fund, um, they're gonna have completely different views on ETH as an asset. And I think that's interesting. I mean, if you ask the average person who's working in finance, let's say they own ETH, they have like a small percentage of their portfolio in it, they have some left over from the last cycles or whatever. If you ask them, they care about how much revenue ETH is making. Like most of them really do not care in the slightest, and that's interesting, right? Because I think that's been one of the biggest criticisms of Ethereum as an asset, is the network itself is not really making money. And then I think there are other differences that I notice, like people outside of crypto do kind of care about this digital bedrock thing, this Lindy effect thing, this idea of a network and an asset that's going to be around for decades, at these like pretty like relatively high levels of valuation for any asset. And I think Ethereum will be one of those things that occupies a very, very unique space in crypto. It's the most secure smart contracts network. Um, it's going to be the most Lindy smart contract network. And over time, and you're seeing it, right? If you're playing the game of constantly competing with other blockchains, whether you're Solana, whether you're Hyperliquid, on performance, on speed, on bandwidth, on hot new sectors like stablecoins. I think it's just kind of going to be a more brutal game. Not saying that there's not going to be winners, um, but I do think nobody is trying to build what Ethereum is anymore.
Fair.
And I think over time, maybe there's some value in what they've built, and we just don't see it right now. But you know, like Ryan said, we don't own any ETH, so we just don't like to see this like incessant bearishness on what we
Yeah.
think. Yeah, go ahead, Ryan.
Yeah, as I say, because like I always think about like what were some of the original reasons why I got into this in the first place. Like I'm going down the rabbit hole in 2014 and 2017, and what really like piqued my interest was Ethereum. And this isn't like a call for any nostalgia. It's not like I'm like, oh wow, these were like the great times, and I want ETH to work because of like that's how it was said in 2017. But I do think those original values, that vision that Ethereum laid out, that Kasani kind of hinted at, I think it's real. And as much as I am excited about Hyperliquid, like listen, like having 28 whatever validators in Tokyo all co-located, I don't think that you can build the global financial system on top of that. Like I think you need something that actually is going to be robust to like any one actor manipulating the system, a data center going down. Like, could you imagine if like we're really trying to put the entire global economy on blockchains, like all payments, all trading, all lending, and like the blockchain just goes down for like an hour? Dude, so you tell me the economy just stops? That's catastrophic.
Catastrophic.
So I think that something like Ethereum does make sense. And it could just be the case that to build something like Ethereum, it's like this multi-decade project because it's like a civilizational scale public infrastructure that we're building. Now, here's the thing. That could be the case that, yes, that is the end game, and we all see this end game, but you start from different points. And maybe Ethereum is not the right way to do it because they're starting off being too ideologically driven. It's too slow. And then in contrast, Hyperliquid comes in. They're like, you know what? Let's just be practical. Let's start with like 4 servers, right? Let's just start with 4. And like, let's actually build a product that people want to use, which is just perps. Like, yeah, you guys can do the whole like, spot. You guys can do lending, but reality, like no one wants to borrow against their ETH. Like we just want to trade. Let's just trade equities. Let's trade prediction markets. Let's trade commodities. Let's do that. And then let's actually start to expand horizontally from there. And then, by the way, let's actually start to distribute the validator set more so that there's not 4, there's like 12 and 20 and so forth. And who knows, maybe in the long term, you actually do get something that starts to resemble more of a Solana where it is like a larger validator set that's measured in the hundreds. Maybe you can start to distribute it a little bit more outside of the geographical concentration of Japan. And so the question comes the question of path dependence of like, all right, is it does Hyperliquid win because it was like the first to kind of get to escape velocity and get all these users, get all these integrations with these big brokerages and neobanks and so forth? Or is it the Ethereum path where it's like, all right, let's just start by making this foundation super, super fucking sturdy. And then eventually, like we can start to build like all the things people want eventually. It's an open question. If I'm really being honest, as much as I like am mega bullish on Hyperliquid for the foreseeable future, you have to be open minded to the fact that it could still go in Ethereum's favor.
It's a good point. The time horizon thing is what's going to crush a lot of people because it is civilizational scale. I like that, the way you framed that. It is like it's a massive overhaul sort of vision. I want to ask you one Bitcoin question as well, just because I'm still kind of a Bitcoin maxi through and through. And I'm curious, like I'll ask you, Ryan, then I'll let Diva Monk go, is like, as if we could assume that a couple select alts, Hype, BTC, ZEC, BTC, VVV, BTC, whatever, outperform Bitcoin, maybe you even reach decoupling stage. You could argue Hyperliquid has already done it, but let's say it like really expands and pushes. Where does that leave Bitcoin? Because there's almost part of me that thinks that you've been in crypto longer than I have, but there's this sort of collective myth that Bitcoin leads and then everything else comes after it, and it's very self-reinforcing, right? Every cycle that goes on, where that happens, you're more inclined, okay, Bitcoin's going to lead. It's going to play out the same way every single time until it doesn't and it gets broken. And maybe that's happening right now. Maybe it's not. Maybe we have to deal with some sailor outflows, whatever the case. But where does that leave Bitcoin as a standalone asset amongst this kind of everything bubble that we're rushing towards right now?
Yeah. So I think again, like I think that over time. So here's what I'll say. Crypto used to be this like self-contained corner of the internet, and it just grew beyond that. And I think with each stage, the behavior of this market has changed a little bit. It happens slow. It's not instant. It's not like one day you wake up and all of a sudden the market just changes. But over time, you start to see like just little different things, right? So you see, in the past cycle, it's like, oh wait, we didn't really have an alt season. It was just meme coins. Like, oh damn, like these other ones didn't work. Oh wait, DeFi was cooked. It's actually meme coins. And then the past year, it was supposed to be like 4-year cycle. 2025 is supposed to be the year. The 2025 sucked.
Yeah,
like Bitcoin was down on the year. We didn't get any alt season. It was horrible, right? And then this year, it's supposed to be like the bear market, 4-year cycle. Oh, you wait until October to buy. And yeah, for Bitcoin, it's been shit. But then for Hyperliquid, it bottomed in January and has actually been pretty much up only since then. This market changes over time. And I think it's a good thing because as you start to get a wider variety of people in that have different biases, different ways of thinking about investing, different ways to think about these assets, I think all these assets start to behave a little bit differently. So now I think about like where's Bitcoin today? I think Bitcoin is just like a bona fide macro asset. It's a big one too. This thing is like $1-2 trillion. It's a big asset. It's not going to go up multiples every single year anymore. That's just not the way it's going to behave. And there's also a chance that this thing can just go sideways for a long time. There were many periods in the past like 40 years where gold just didn't go anywhere, right? And you could say, okay, this is like emerging store of value. And no, it's like you can create a million reasons why Bitcoin just can continue to go up. It's like the basic assumption underpinning this entire, like the entire investor psyche of this asset class is that Bitcoin always goes up. You never sell your Bitcoin. You always hold the Bitcoin. It's the first thing that leads, the first thing that falls. That just might not be true. Like eventually you might just get some assets that just because they actually, if we actually believe this shit actually matters, like we're going to create products that people use, eventually you will get assets that just don't do something totally different from what Bitcoin's doing. They go up for different reasons. They go down for different reasons. And Bitcoin's its own thing. And it makes sense because the way I thought about it is Bitcoin, if you categorize it like a store of value like gold, and you categorize something like Hyperliquid more like, say, an equity, well, dude, look at like equity and gold correlations. Like these are just two different things.
Yeah.
They are. So yeah, all to say, I think Bitcoin has its own set of issues right now.
Mhm.
And I think those issues may prevent some capital from coming into the asset class because there still are some people that treat this all as like one lump sum thing. But I think that's just going to only continue to get better, I guess, for the dispersion of the returns over time.
I don't think I gave enough credit to how big Bitcoin got. Like I saw this thing today that it just dropped out of the top 10 assets in the world. Like it was, like some of these price targets feel like, whoa, when you look at it at scale compared to Nvidia and compared to Google and compared to some of these assets, it's like, whoa.
Yeah, we won.
Yeah. Mug, I'll go back to Hyperliquid. I'll ask you a couple more. I'll let you go soon. On sort of on the Hyperliquid topic broadly, like I think the most exciting aspect of it is like when I think back on crypto, my time in crypto, I think about periods where new participants have entered. And the two standout ones are when I entered in crypto, like 2020, 2021 through Top Shot NFTs was like a huge moment of just like net new buyers, creators, everything, thinkers, everything in between participants. And I think of 2024, which I know not everyone loves to think back on 2024, but there were net new players that showed up for meme coins, for AI coins, maybe blow off the top with Trump. And you did have Bitcoin ETFs, and I don't know how many new people came in for like Solana ETFs and things like this. But it does feel like but behind one of the first successful DATs ever with Per, and then the Hyperliquid ETF, there's like a net new buyer entering the arena to play Hyperliquid. And I'm curious, who are these people? How should we think of them and think about them? And how does that dynamic evolve? Because it feels like a little bit of a new game.
Yeah, and I think there's a couple of camps, right? You have your typical like family offices. You have your discretionary hedge funds. Like I think D1 posted a 13F where they own Per like
Sick,
in
so sick.
February, and they're a pretty well regarded shop. And I think we'll start seeing more of that. And then you have kind of like your longer term sorts of capital, like your endowments and whatever. I think the first step is really kind of like the discretionary hedge fund people, your nimbler family offices, your Citrini adjacent types, like the people on FinTwit that like read Citrini, and he's been tweeting about hype a
He
decent
has been tweeting
amount.
about hype.
And these people have a lot of money. They have a lot of money. They don't really care about Bitcoin. Like they don't care if Bitcoin is up or down. If they see a good asset, they'll buy it. They care about a believable story, which Hyperliquid is. They care about cash flows. They care about whether or not it's making revenue. They can very easily forecast. Like I think the biggest thing is people in crypto today kind of look at hype and they go, "This is so expensive for a crypto asset. It's pumped for so long. They have so much PTSD from crypto assets in general, and they go, hey, there's always a chance that there's some sort of regulatory black swan event and this thing just gets wrecked, right? And I think that's natural because that's happened so many times in the asset class. But I think whenever I speak to these people who work at funds, who work at sell side shops, like people who are asking me what this asset is, once they understand what the actual addressable market is, like what it could potentially disrupt, the risk is just kind of like okay, whatever. Like, yeah, okay, this thing could get yeah. There's some risks behind regulatory clarity. It's fine. Like, if this thing actually does end up disrupting this multi like $100 billion like exchange and brokerage space, then it's going to be orders of magnitude more successful than what it's done already. And I think that sort of asymmetry is what's getting people really excited. And so they're not really looking at, okay, like can a DeFi or crypto or L1 token get to like $100 billion plus? They're looking at Charles Schwab and IBKR sitting at like $150 billion valuations. Like they're looking at, okay, is this actually a better type of business than those are because they actually own the underlying exchange infrastructure? They're thinking about all these things, and it's just kind of opening up. Like I just talked to a hedge fund analyst the other day, and we had like a 2 hour conversation, and by the end of it, like his mind was blown. I think the biggest issue that people have is they just don't know
They don't
how
know.
to find the information
Yeah.
that they need about Hyperliquid because there's no 10K. You can't just hit up Jeff on the phone and go like, "Yo, like, what is this? What is that?" There's no like you have to. The docs aren't that helpful from a investing perspective. And I think what's changed is now you can go to David Seamus and Bob Diamond. You can go to Grayscale, who's marketing their ETF. You can go to Bitwise, and these people are helping get the story out there. And I think the way that this stuff works is, one dude buys it in their fund. He tells another fund to buy it because now they're in it, and he starts sharing the story. And then that starts spreading like wildfire. And then sell side analysts are covering Per. And then all of a sudden, you kind of have this like mass TradFi FOMO event coming into this token, while crypto natives are just completely sidelined. I mean, over the past few weeks, the DAT has bought like 80 million or so in hype, and the ETFs have bought over 100 million in hype. And this is only going to continue. Like, I don't know why we're focusing on Laura's short, which is like $100 million, when Per has $100 million in the bank to buy more hype, and they're running this ATM weekly now. And so, like, I really think where the typical like TA crypto traders get messed up is when we enter a paradigm shift for an asset, and you're marketing now to a much larger group of a much larger class of capital. And I just don't think these inflows are priced in at all.
That was sick. That was
10 out of 10,
that was
no
really
notes.
sick. How do you guys price regulatory risk?
Yeah.
Yeah.
Do you want me to just Ryan?
Sure, go for it.
I mean, I think it's one of those things where, okay, what you have to kind of take these worldviews and go, okay, what happens if Hyperliquid is not legal? in the US, right? Well, that is just sort of what it is right now. And I think one thing that we walk through in the purplification thesis is the potential for something like Hyperliquid to disrupt global CFDs, right? And so CFDs trade about $1 trillion a day, and this is mostly notionally, and this is mostly global activity. And so there, even in the state where Hyperliquid is not legal in the United States, I think you can build a fine business off of that, a really, really good business off of that activity. It probably is not as exciting, but it's still, I mean, Hyperliquid as it exists today is still a very, very interesting business. But then it's like, okay, what if that gets unlocked in some way? Like Trump the other day was just tweeting about perpetuals. I mean, it definitely
That's
definitely wasn't
insane.
Trump. It definitely wasn't Trump. But somebody on the Trump administration is tweeting about perpetuals. We have Jake Stravinsky, who is top of his class at what he does in DC. You have now Hyperliquid in bed with Coinbase and Circle. Obviously, Paradigm's a huge stakeholder in Hype. Obviously, you have now Grayscale, a huge stakeholder in Hype, Bitwise, a huge stakeholder in Hype. And so I'm like, if this thing passes, the sky is the limit for Hyperliquid. And so when you view the risk return of that trade, of like, okay, if this shit doesn't work, then Hyperliquid is basically just what it is today, and it can still be a secular grower. If it does work, this thing becomes like a mega business almost overnight. And so when you weigh those two outcomes, it becomes really obvious to me. And so I think it's just playing those probabilistic views.
Yeah, I think Monk makes a good point. This is actually a topic that comes up often in discussions with different discretionary hedge fund managers, is like inequities, because they're all looking at this. Like in many cases, these people just like copy trade each other, and there's a new idea, it spreads like wildfire, and they all start doing this. And it's kind of funny because I think again, because so many people in this asset class, like regulatory overhang has been this existential threat for so long, and it's really screwed some projects. People are so scared of this risk. And when you tell someone, like some of my buddies that work at these shops, like, hey, listen, you're gonna like the future of Hyperliquid is like unified margin to trade any asset in the world. And they get the vision instantly. Right? They're like, wow, this is incredible. In fact, there's maybe only like 3 to 5 businesses across all asset classes across the world that are even playing for this outcome. And Hyperliquid is one of them. And it's probably most unique because the business itself is not like a traditional equity finance business. It's like 12 guys that just went and built this thing. It's just software that runs like almost autonomously. It has 99% net income margins. It's literally like a money machine. It's just a money printer. Like it's just all going back to the hype token. And when you tell them, okay, this is the vision, and okay, there's just like this regulatory risk that maybe they can't get in the United States, or like, oh, so you're telling me that this could be one of like the greatest financial businesses in the world, but there's just like regulatory risk. They're like, okay, well, I just will note that there's this risk and I'll get long. You know, it's not like it stops them from like being long. It doesn't make any sense, right? Another thing too is I think ironically there are many people in crypto that are a little bit too valuation sensitive. And I think what it is that, you know, historically not being valuation sensitive got people burned because you end up losing money. And then now everyone just went like the exact opposite direction. They're like, they start pulling out their calculators and like, oh, I pulled out my
DCF.
calculator.
Yeah,
and
the
I put my
complete
DCF.
opposite. It used to be crypto math. You would get inflated crypto valuations.
Yeah, and it's just like, do you know how many businesses have been expensive their entire life in public markets and have still gone on to go up like 10, 100x? Like being like expensive does not mean don't own, right? Like I think people need to be crystal clear about that. Like this is also a business that is growing like, you know, triple digit percentages like year over year, right? I mean, yeah, of course it's probably going to look expensive along the way.
Yeah.
Right.
It's funny because they'll do a DCF of Hyperliquid, and then they'll go and long some semiconductor stock with zero DD, and just
by
stay this up
arm,
publicly.
right? Also, on the regulatory side, there's like I think that's why there's such a big trade opportunity, is because you have this overhang of like there's like delta to be captured on, is there risk, is there not? There was that, what was up with that tokenized stocks announcement a couple days ago, Hester Pierce thing, where they were like, came out and made this like really pro announcement and then walked it back like 10 minutes later. Was something weird happened there, but the red candle just got gobbled on that. I mean, that was a little bit bizarre, huh? What happened there?
Yeah. I mean, so once again, I'm not like a lawyer here, but my read of that is that that had nothing to do with perps. This is about like actual tokenized
Okay,
assets.
yeah.
And I think the reason why they end up making that specification is because you don't want it to be the case where, and I think the SEC realized this, where like anyone, like not just the issuer, can create a tokenized like security, and then it's like inconsistent the rights that people have by holding it. Like they want to prevent all these like random Anthropic SPV wrapper. And
Yes.
like one of the great things about when you trade through your brokerage account, whether it be IBKR, Charles Schwab, is you don't have to question about like, is the asset you're holding actually the asset? But when you're buying some like random tokenized equity on Solana, it's like, dude, what the hell am I even buying?
What do I
Is it just
hold?
like,
Yeah.
you have no idea. Do you have any voting rights? Do you get dividend distributions? You like it's just you have no idea. So I think it is a good thing that they kind of like pump the brakes a little bit and be like, all right, like let's make sure we do this right. So if you do this right, this is going to be a huge, like huge unlock to be.
So then I ask you on the also the SPV space as a whole is a disaster. But then how do you think about like, okay, Trade XYZ lists Cerebrus pre-IPO. Do you have the same like what the hell do I hold type of feeling?
No, because I think in that case it's clear. I don't actually hold the equity. It's just like this derivative. But I think the difference is like with the tokenized equity, like unless you actually go through the documentation, read the fine print, you think you're actually holding the equity and you're actually not.
Yeah, makes sense. That's a good point, by the way. It's the whole scene. You talk to some of these SPV guys, and they show you. I have an Andrew, and I'm like, who are you? You have it from a guy. Like, what is going on here? Carrie's ridiculous. Yeah, congratulations, guys. You're what is your guys' relationship? I think it's so funny you go on pods together. I love it. Like, what is your like relationship, and then what is the vibe like the vibe at Syncrasy? Like, how many of you are there, and what is everyone working on?
Yeah, well, I mean, we work together. That's our relationship. Yeah, so there's 4 people on our investment team. My co-founder Dan, who doesn't really do any public experiences, and we have Wilson, our team, who's worked with Masari. And yeah, what else? I mean, I guess one of the reasons why we like to do these podcasts together is oftentimes we're talking about Hyperliquid. We co-wrote the rate purification thesis. Sunny Monk like spearheaded that one. But yeah, I think it's like, I think Monk is kind of like the in-house Hyperliquid historian expert. So it's always good to kind of have him on the like these live streams and podcasts when we're talking about Hyperliquid.
Yeah, I mean, Ryan's my boss. That's our relationship. I went and asked him for a job out of Masari. Shout out to Tulip King, by the way. I know he's working with you right now. We work together at Masari. Yeah, no, I mean, like I was at Masari with Tulip with a bunch of other guys. And I was at the time like entertaining potentially moving on. And I go, okay, if I had like my pick of where I could work, where would I want to work? And I was obviously trading on my own. I have a public investing background. I was thinking about working at a liquid fund, but I didn't know if I wanted to jump into the liquid space at that time because I felt it was still pretty early for liquid investing, if we're being honest, which clearly was correct. I mean, liquid funds have not been doing well. But I said if I could just work somewhere, it would probably be Syncrasy because I've seen these guys like nail Soul. I've seen them nail Hype, timed both incredibly well, and then sized into both in an incredibly concentrated fashion. I'm like, honestly, these dudes are Chads, and if I could work with anybody, I would want to work with them. And so Ryan and I knew each other before because he was a Masari alum, and we had met up to talk about Hyperliquid. And so I just asked Ryan for a job.
Wait, before I let you go, I'm reading this book right now. It's called More Money Than God.
Yeah.
And you read it before?
Yeah.
I have this like hedge fund obsession right now. What is the state of liquid funds in crypto specifically? And how did you, I guess you went from Masari and you started Syncrasy?
Yeah, so my background, investment banking, Masari, and Syncrasy. My co-founder was also investment banking. That's where I met my co-founder, and then he did like long short equities and then long only for about 5 years. And then we started Syncrasy. as far as like state of liquid managers or liquid funds right now, I'd say, like, listen, I think the past 4 years has not been the greatest environment for anyone who's just long bias, with the exception of Bitcoin and then like a couple outliers.
Are you long
Like
only?
generally, we are long only.
Yeah.
Yes, we don't short.
For the better, honestly. It's like shorting's the dark arts, man.
Yeah, I mean, listen, like this is early stage tech. Like, if you have the short to make money, it's because this tech sucks. And if the tech sucks, then why are we here? All right. So I think we've always just been long only because I think that's like actually the asymmetric opportunity that we've seen with this asset class for as long as I've been here. Um, but yeah, so what I was going to say, oh yeah, so the past 4 years, I think we haven't really been in a secular uptrend for the asset class, with the exception of Bitcoin. It's been a very mixed bag of things trading. Even Solana, which was like the coin of last cycle, I mean, you can argue that it like barely even broke its all-time highs from 2021. It's kind of just been in a range since then. Same thing with Ethereum. In fact, like the only assets that have seemingly like made new highs have just been like the new ones,
Yeah.
like Hyperliquid. So I think it's been like a challenging environment for liquid funds. But what I will say is that, and I think this year is like actually a good thing, is with Bitcoin kind of struggling, I think asset selection outside of Bitcoin has really been a big differentiator. And if you've been able to pick well, you probably have done well this year. And I think this is like a sign of what's to come for the asset class, that there's more investable assets beyond Bitcoin that can actually put up the numbers and outperform. So at least that's like what we're seeing internally in our end.
Sick.
Yeah.
Go ahead, Monk.
Oh yeah, I was just gonna say that like hype at one point was at like $2 billion you could have gotten an entry on, and now it's at like 60. And so $2 to $60 in the public markets in an incredibly short period of time. And if you're an allocator and you want exposure to that, there's just no way you're gonna do that yourself. Like this asset class is a minefield. You can't do it passively. There's no index of crypto tokens you can buy to get
Yeah.
exposure to crypto. So if you want liquid exposure, like your best bet is probably to go find a liquid manager or avoid the asset class entirely, which is what a lot of people have done too. So
Sick.
Yeah, I think that the indexing part is actually, this may be one last thing. The indexing part is actually really funny because, in equities, you can do like S&P 500, you do a QQQ, whatever. It's like really easy to systematically allocate it to it. There's like no equivalent in this asset class, like literally none. I think for the longest time, people have treated Bitcoin as the index because it's like the easiest thing to buy. You can buy it for free, in your brokerage account, retirement account, whatever. But if we're actually going to have like real use cases, real products emerge beyond Bitcoin, then that doesn't actually that doesn't capture the full opportunity. And it was actually interesting. I was on like a couple strategy calls for like the different hyperliquid ETFs recently, and there are some people who are allocating to hype, and they're not really valuation sensitive here. And literally the view is more of like a portfolio construction lens of, okay, in order to capture the opportunity, I need to have, X, Y, and Z assets in these weightings to fully capture the opportunity, right? Because sometimes like that's actually the most important thing when you have like a big secular trend is like, yeah, you can be the guy that says, okay, I'm gonna find like the best asset and I'm gonna like make the most money. Or you can be the guy to be like, you know what, I could do that and then I could swing and miss, which is a risk. Or I could just like try to make sure that I capture whatever opportunity there is. Because listen, if this asset class is going to be a thing and it compounds at like 25, 30% for the next decade, you just need to make sure that you just capture the asset class, right? Like it doesn't matter if you like miss out on like the one big thing by not being supersized. You just want to make sure that you're in the trade and you capture it, you get the exposure. Like that is what people have lost sight of, I think, in all of this, is that you got to think long term, 5, 10 years out. What do you think is going to be the CAGR for this asset class? And make sure you find ways to take advantage of that and not take yourself out of the game.
It's a good point too, because these like others charts are just like filled with dead money. It's like they have all this garbage and they're not even, you can't even use them to chart against anything. Look, you guys are sick. I think what you do is so sick. I have a huge like fun thing going right now, so I'm like particularly interested in your job, and you guys have nailed the hyperliquid trade so publicly. So I look forward to our part 4, maybe when Bitcoin's at 60K, hype it 100, everybody's in panic mode. I text Brian, please come on. You guys are awesome. Thank you again for coming on. And oh, let me ask you a question. Someone type this in the chat. Last question, I'll let you go. Malcolm typed this, my co-founder. I've been running around saying I'm obsessed with activist investing right now. I think it's the coolest thing ever. There was this company that came, this fund, Irenic Capital came out. They bought like 3% of Snapchat. They fucking posted 60-page presentation on like exactly what Spiegel should do and how it's gonna work. Da, da, da. They didn't listen. What is your take on the large distribution channel, like a Citrini, like an Ansem, like one of these really large like KOL type of figures in FinTwit transitioning into the like activist managing money liquid sort of scene? Last question, I'll let you go.
Sounds like what you're doing then, huh?
No, I run around the house all day. And I'm like, when I make 10 million on my Hyperliquid account, we're turning Counterparty into a fund. I run around screaming it all day.
It's we call fun guy.
Yeah.
Yeah. What was I gonna say? So I think like we've seen this already, I think, in venture capital, like this like influencer led fund management, where like if you can build a reputation and you get a ton of followers on Substack and Twitter, and you build a reputation in the industry, then you might be able to source interesting deals, and then you can do fun. And you've seen like so many people do this over the past like 5-10 years. It's they started out with a blog, they started out with a podcast, whatever, and they raised the money and they did that. I think for liquid investing, it's a little bit different because it's not really your ability to make money is less about your access and your reputation. This is more about like, can you just analyze a public opportunity that everyone else has access to better than average? I still think if people do it, I think people like to give money to people that they trust and I think easy way to build that trust is just to be visible. In many cases, people conflate familiarity with trust, which can be good and bad. But I think it works. And as far as like activist investing, there's maybe like another part of this is, I mean, this is maybe my own personal view, but everyone has each their own, they run their own style. I think the second that you have to, as an outside shareholder, that like maybe you did a ton of diligence, maybe you spent a year diligencing this business. The second that you as an outside shareholder are jumping in because shit is so bad to make a decision,
fair.
Dude, just like sell it. Like sell it. Like you're not like locked up. Just like there's so many other ways to make money. There's so many like great businesses. Like one of the great things about, because I remember this is actually something I thought about with Syncracy early on is, okay, wow, you know what? We have this decentralized governance. Like, what if I was super involved in governance forums and I could like make an impact? And then I thought about that. I'm like, damn, the things I can make an impact on, they kind of suck. Like, I don't want to be involved in like the token holder voting process. And the things that actually I want to own are things like hype. Like, dude, there's nothing I could tell Jeff and Co. would make their product better, and that's great. That's great. Like, they should be the experts. They should be the ones that don't need me. And I'm just a guy who's just holding it and maybe serving an educational role. That's it. All right.
Sick take. Honestly, yeah, good take. It's like the club that they want you in, you don't want to be part of, kind of thing. I love it. Thanks for the take. All right, I'll let you guys go. Top of the hour. Thank you so much. It was an absolute pleasure. Congratulations again. I look forward to part 4. It's always great to have you guys on. And yeah, have a go. Knicks and 6, man.
Let's go. Let's
All right,
go.
guys. Thank you so much. Have a good one.
Thank you, Thread.
Peace.
Later.
Movie. They fucking rock, and now I have to. God, how bad is it? Ooh. Holy fucking God, man. Are you kidding me? This thing is up 31% after hours. Holy fuck. In God. Holy fuck. In God. Wow. That is unbelievable. And guess what? Hyperliquid does not have it. Hyperliquid does not have it. How much is Hood up? Hyperliquid does not have it. Hood is not up after hours. Hyperliquid does not have it. Congrats on Zek trade, by the way. Is that a threat? Bro, how does... Shoku! Come on, man. I need this one. I absolutely need this one. This is crazy. Wow. Dog, it's up 30. We were just going over this when Trump first mentioned it. Trump on May 6th came out and said, go out and buy a DELL. On May 6th, brother. Oh, I don't want to look. I don't even want to look. I don't even want to look. May 6th, he said, go out and buy a DELL. Oh, a DELL. You guys kept saying that. I'm like, what are you talking about? I get it now. May 6th. Wow, that was like so recently. Okay, so hold on. So it's right here. At current price, we're looking at like after the pump, we're looking at 75% in like 3 weeks. Hood, I don't consider a Trump stock because it doesn't, I don't know, it's a little weird. Like it's a separate app. They're not used. It's a separate app for the Trump accounts. He's not really saying pro Robinhood. Robinhood is listed nowhere on the announcement. It's a little bit weird. But it's like, all right. Yeah, they're being treated like a contractor. If Dell's up 75, 80%, we got to, I don't know. I mean, there's 5 Trump stocks here that got quantum investment. IBM is the first one, which is a monster. But I mean, how big is Dell? Dell's 200B. IBM got the biggest check from Trump. It's a $250 billion stock. It's like 22% off top tick away. GFS we looked at, I think looks the worst. Global Foundries actually looked the worst. Damn, looks insane. Just broke ATH. Is retesting ATH right now. Is 44 billion. This looks insane. GFS. QBTS also. So GFS got the second biggest check. This looks nuts, gentlemen. I'm not gonna lie. I need this on HL immediately. Retest at all-time high. Third biggest Trump check is QBTS. We looked at it this morning. QBTS, D-Wave. I'm trying to get the D-Wave CEO on. $10 billion stock. This looks crazy too. I can't lie. Rigetti got 100 mil as well. Which is a $9 billion stock. This looks gross. And then INFQ got 100 mil as well. I don't think I could say the word VPN on this stream, so you got to fly to Mexico. INFQ is a $4 billion, bro. It's tiny. They got 100 mil as well. Do you buy the smallest one? I don't really know if you buy the smallest one, but I feel stupid if we don't buy one of these Trump quantum names. I mean, he's like screaming at you to buy it. But then this is the most ridiculous thing I've seen in a while. Okay, going back to this one more time, Trump Abbott talks to fund 2 U.S. drone companies. It just so happened that Don Jr. backs 2 public drone companies. UMAC, which is actually a company. This is like actually a thing. Unusual Machines. It's up 57% today. It's a $1.5 billion stock. Okay, $1.5 billion. This is actually a company. And the chart looks unbelievable. But then PUSA, is a fucking golf club. It's a golf resort that Donald Trump Jr. converted into a drone company. And it's worth $90 million, bro. It's like a fucking shitcoin. I mean, I think Truth Terminal GOAT is worth more than this. No, 16 mil. I mean, bro, it's $90 million. It's still listed as a resort. It's listed as consumer services, movies, and entertainment. Okay. And they're about to get $1 billion or some percentage of $1 billion grant from Trump admin to build drones. It's listed as a movie company on TradingView. They don't even know that it's been converted into a drone manufacturer. I don't even know if you can buy this. How much volume did it do today? How do you even check? I don't even know if you can buy this, if you could purchase this. How do you even purchase this? Pusa. How much volume did it do on Robinhood today? It's on the hood. Let's see. How much volume? Probably a lot on this announcement, but I mean, does anyone even know this is a thing? Do I have $1,000 on my Robinhood account? Even you got to go to figure about it. Here it is. Oris Greenway Holdings. Average volume 738K. It's a 738K volume average. Today it did 38 million. It usually does 700K. I mean, bro, how much did Asteroid on ETH do? Asteroid has done 3.7 million. It's on like 5x its average. I mean, this is insane, really. I think we ripped some options on this thing. I don't know. How much money do I have in my Robinhood account? I have $4. I have $4.60 in my Robinhood account. What can that get me on Pusa? I mean, I don't know. Interesting one, at least. Worth following. It's 90 mil. What do you do with 90 mil? Do you have level 3 options enabled? I think so. I'm gonna save a bunch of topics, I suppose, for tomorrow. Get you some Pusa with what I was. The layoff thing is in full force, by the way. We're gonna read some of the Citrini article again tomorrow. Layoff thing is in absolute full force. And this article is scarily accurate right now. Okay. Number one is he predicted SPX is going to go to 8K in this before any major repricings. He says that SPX euphoria was palpable. SPX went to 8K. Look at this, how close this is. I mean, bro, it's like 5% off of the like euphoric number that was written. And the second thing is layoffs are starting to happen crazy. Wix announced some huge layoffs. I don't know the exact number, but I think 20%. Yeah, 20%. Wix announced 20%. Meta's been doing it nonstop. Amazon, everyone's doing it. Everyone is doing it. 20%, 20%, 20%, 20, 20, 20, 20, 20, 20, 20% everywhere across the board. Should we watch this? Sorry. I did see that Peter Thiel is going to Argentina. I did see that. He did have faith in Vance, and no faith in Vance. But I did want to look at this real quick. As we approach a potential Tesla SpaceX merger, which let's see if we have any new news. This is sort of yeah. There's no new news on this. Could a SpaceX Tesla merger happen earlier than expected? Let's see. Let's watch a second.
That again, Musk has been chatting about wanting to potentially merge SpaceX and Tesla, his two biggest and most kind of prominent companies there. That's kind of, I guess, the goal, and that's what we're hearing. But the question is what that means for Tesla investors.
Now, let me ask you this. Did you hear this and think, yes, it's about synergy? Or did you think it's Mr. Musk consolidating control? Maybe it's both?
Definitely both, right? I mean,
they're making it seem like this is going to happen. So he already merged XAI and SpaceX, as we know. And they're saying it might be inevitable that Tesla and SpaceX merge. At current price, they're valuing SpaceX at like $2 trillion and some change on HL. And Tesla currently trades at a $1.66 trillion market cap. And so a merger puts it at like, I don't know, 4-ish trillion. Assuming that there's no dilution, which I don't know exactly how it works. And we already did the SpaceX segment last Friday. SpaceX segment last Friday, where it feels like this thing is going to get the infinite bid up only. They're bending the rules to sort of force people to twop SpaceX on low float, high FTV. And I pulled this up. I have the 10 largest mergers in history and then the 10 worst mergers in history. And I am not familiar with how these go at all. But it's crazy how small they are compared to what SpaceX would be. And these don't really happen, I suppose. Charter and Time Warner Cable, 2015. It's the acquisition. $79 billion. Time of the deal. Nye's ExxonMobil merger, $81 billion. 8 is in the year 2000 pharmaceuticals merger. Glaxo Wellcome and SmithKline Beecham is $107 billion. 6, AT&T Time Warner, 2016 to 2018. Some deals are valued higher, just the combined value of both. Got it. $108 billion. United Tech and Raytheon, $121 billion. 2020, that was kind of recent. Dow and DuPont, $130 billion in 2015. Verizon, $130 in 2014. AOL and Time Warner in 2000 for $165 billion. That's a fucking monster in 2000. And then the biggest ever. I don't know what this is. Vodafone Mansman, $180 billion. Hostile acquisition. What happened here? Hostile acquisition for $180 billion. Hostile takeover. What happened? Ooh. $180 billion merger that reshaped global telecommunications. As the largest acquisition in corporate time of the history, British telecom giant Vodafone successfully acquired German conglomerate Mansman, shattering taboos against hostile takeovers in Europe. He made a surprise $33 billion acquisition of the British telecom company Orange, perceiving this as the threat to Vodafone's European wireless dominance. CEO Chris Gent retaliated. Wow. Facing immense pressure from major investors, Esser surrendered on February 4, 2000, accepting a sweetened deal that valued Mansman at $180 billion. Holy fuck. That's crazy. But I have a video that I want to watch, which is 6 minutes long, and it's the 10 worst mergers ever, because Vodafone used to be peak F1 McLaren sponsor. No way. I've never heard of it. That's crazy. Let's watch this. I don't know how these usually go. I know nothing about merger M&A, I guess. I know nothing about it at all. But the SpaceX thing feels like it's going to fucking happen.
In these cases, 1 + 1 almost equaled 0. Welcome to WatchMojo.com, and today we're counting down our picks for the top 10 most disastrous mergers in business history.
I did it with as much or more excitement and enthusiasm as I did on that night when I first made love some 42 years ago.
For this list, we only considered mergers where the two parties were more or less of equal size, or where the deal was at least billed as a merger of rough equals. That means we excluded acquisitions where a much larger company acquired a smaller company. Number 10, Excite and At Home. With their shared VC firm Kleiner Perkins concerned about increasing competition, the high-speed cable internet services of the At Home network were combined with Excite's popular search engine in the hopes of attracting millions of subscribers. The resulting $6.7 billion Excite At Home deal was one of history's biggest mergers involving two internet companies. But the NASDAQ's systematic meltdown and the culture clash between Excite's .com bubble and At Home's more corporate and conservative cable business ultimately led to its demise. Number 9, New York Central and Pennsylvania Railroad.
Damn, railroads, brother.
This unlikely merger of two rival railroad companies was their attempt to remain relevant alongside the booming auto industry. Though Penn Central became one of the United States' biggest corporations, the company couldn't survive inflation, internal conflicts, bad management, and massive cost-cutting. A promised $200 million government loan never materialized, and in 1970,
Not on Trump's America, everyone's getting those loans.
Penn Central filed for the biggest corporate bankruptcy to that point. Number 8, Kmart and Sears. It was
Kmart
businessman
and
and
Sears.
investor
Damn, Sears is
Edward
gone,
Lampert
huh?
who united the struggling department
Sears
store
is
chain
gone?
with the struggling discount store chain. Unfortunately, both Sears and Kmart continue to fail as Sears Holdings.
It's not that the retailer per se is weak, but if you have the greatest store and it's not near where the customers are, that's a problem.
With the subsequent recession uncovering problems.
Is Sears like completely gone? Five. Damn, I used to like Sears. That was a cool store.
Like poor investment and shrinking revenues. To make matters worse, the higher prices of the company's goods increased its irrelevance
Should
against
we take like a pit road trip to the last Sears?
retail giants like Walmart. Number 7, Alcatel and Lucent. To keep up with the ever-growing telecommunications industry, the networking technologies of American multinational Lucent were joined with French company Alcatel. However, the $13 billion plus deal did more damage than good. As revenues
I used to steal Mad Electronics from Kmart. Nice.
decreased, the two cultures
It's all this
found little common
telecom
ground
shit, bro.
and few lasting solutions. Within a few years, higher-ups at Alcatel-Lucent resigned, losses totaled in the millions, and the value of Lucent's Alcatel-purchased assets plummeted.
We haven't executed all elements in the...
Here's what I want to know. Here's what I want to know. Wait, I want to watch the last one.
Ever. Number 1, AOL and Time Warner.
AOL and Time Warner.
It's been called the worst merger ever and the single biggest mistake in corporate history.
The merger of the #1 internet company with the #1 media company will bring together the best of both worlds.
After Time Warner merged its old
By the way, I have Jinko jeans on right now.
school print media with AOL's new school digital content for $164 billion, the dot-com bubble burst. Add AOL's reliance on dial-up internet in an increasingly high-speed industry, and AOL Time Warner was reporting a $99 billion loss in 2002. A rapidly declining stock price.
They lost how much?
Time Warner was reporting a $99 billion loss in 2002. A rapidly declining stock price and millions in lost jobs and subscribers forced Time Warner to spin AOL off into an independent company 7 years later. Do you agree with our list? Which do you think was the most disastrous merger?
Wow. No, AOL was before my time. You want to see the jeans? AOL was before my time. Dude, 99 Spurs. Look, Jinko. JNCO, baby. AOL was before my time, man. I'm young. I'm old, but I'm young. Has anyone ever what's the teacher? Hope you're blessed. Hope you're blessed. Okay, here's my question then. Is like what's the biggest merger between the same founder? Like biggest M&A between same founder, like same CEO. Has that ever happened? X.com is the 2000 merger of X.com and Confinity, creating the company that later became PayPal. It's just Elon. It's literally Elon. He's the only person that's done it. Bruh. What? It's literally just Elon. Okay. It's merger formed one of the earliest digital payment power. It's literally just Elon. How is that possible? I don't know how the board lets him do this shit. Well, he wanted to create fucking PayPal. It's hilarious, by the way, that it's X.com. That is nuts. All right, ladies and gentlemen, this is a fun stream today. We had some plunge protection to do. Tomorrow is Friday, but tomorrow's like a packed Friday, bro. Here are my segments for tomorrow. Ready? This is what I want to do. Number 1, I'm calling the bottom on alcohol consumption, and our up-only trend is high-class IRL experiences. I want to buy vintage wine. I want to buy some vintage wine. I got like some bread ready to deploy. I want to buy vintage wine. Number 1. Number 2, so we're doing a segment. Number 2, I want to do this segment. I saw a really good tweet about this, and I fuck with it. Was showing the new Ferrari EV, and it was quote tweeting this guy's old tweet where he posted some old Ferraris, and it was like, invest in vintage cars. They just don't make shit like this anymore. And I actually like it. They don't make shit like this anymore. We're gonna look at some vintage car charts tomorrow, like some Ferrari. Like we're gonna get in the weeds tomorrow on some vintage cars because they don't make shit like this anymore, and it's actually an interesting ass trade idea. I like that a lot. Number 3 is I really want to go deeper on this local AI thing. I'm kind of fired up about it. I think we're at some point there's going to be some huge data breach. I have an old Mustang. I learned how to drive stick on a Mustang, by the way. Who here could drive a manual car? Serious question. Who could drive a manual car? I can. I don't expect most of y'all to be able to do it. I know how hard it was for me to learn. But I learned how to drive on a Mustang. All y'all lying. All of you are lying. Brother. All of you are lying. What do you mean kinda? You can't kinda drive a manual. You can or you fucking can't. You can either put that thing into first gear on a hill or you can't. Period. You can put it in first on a hill or you can't drive it. It's very simple. It's very simple. Okay. It's very simple. If you can't, you might as well. But I'm hyped about this local AI thing. I think this is going to be a huge trend. Running local AI. It might just be VVV. But I also like the Apple trade. There's a couple other ones I like. And we're going to talk about that third. And then the fourth thing I want to talk about is I'm kind of hyped about bio right now. Consumer drugs, bio. I'm hyped about Eli Lilly. The whole company is long Eli Lilly. It's not me, except for me. Everyone else is long Eli Lilly right now. And so we're going to talk about that as a segment tomorrow, LLY. And then the fifth thing we have to do tomorrow, we're not going to get through all these, but I'm going to do my best, is a callback on Citrini article, Global Intelligence Crisis 2028 is playing out to a fucking T. And the layoffs are starting to happen, and I want to analyze what happens next. So as I leave you today, Zcash, 546. Did I saw the bottom? Did I not? Maybe not. Hyperliquid, 61. Looks great. Bitcoin, 73,518. Looks like a chud coin. And stream viewership, pushing all-time highs. So it ain't that bad. It ain't that fucking bad, baby. It's Thursday. It's a big Thursday. We got a big Friday stream tomorrow. And I am excited to do it. So I'm rugging the stream. I'm not sharing the pit link. I'm gatekeeping it. I did close the trade that I saw at the bottom. Maybe not, but it was one of my bigger trades in a long time. I'm fucking hype about it. If you know anything about vintage wine, rip some messages in the chat. I don't. Maybe I can get a wine connoisseur on the stream. That'd actually be really fun. Maybe not for tomorrow, but at some point in the near future. And we're going to have a really fun stream tomorrow. I'm live every day at 3:30 p.m. EST, more like 3:35 p.m. EST. And on that note, I'm going to stream. I love you all so much. Thank you so much. Thank you so much for supporting. I will catch you when I catch you. I see you when I see you. Have a great rest of your day. Love you, motherfuckers. See you tomorrow.